Matt, I gotta say something.
What do you gotta say, Steve?
The second it hits 5 o'clock, it is not even 5:01, and we get the late comments.
Steve, you're a good man. I apologize. I was answering your question on my channel.
No bueno. No bueno.
Everyone's coming to your chat though. Nobody wants to come hang out with me. Everyone wants to go to Hot Steve's.
Late. Well, Matt, I have to apologize. I still lied to you.
You always do.
The S&P is not 7,000 yet.
Yeah, I let people know that on my live stream.
It is not 7,000 yet. The S&P was up 42.77 today. We are at 69.44, inching closer.
Steve, what are we going to do with you, man?
I don't know. We need the market to do something. I don't like the fact that it's not 7,000 yet.
Why can't I gift a member on yours yet? I don't even have an anniversary yet. I'm going to put a serious poll out there, Steve. You ready for this?
Let's do it.
I'm curious. We both have fire thumbnails today. I'm going to ask whose thumbnail.
Which one did you use?
The one that I sent you.
Oh, yours is better.
You don't know that.
No, yours is better. You don't even have to.
Let's let the chat decide.
I'm telling you that yours is better.
Steve, you want to hear the poll that I just got, actually? I asked people because Gemini apparently is catching up a little bit on ChatGPT. Not obviously like neck and neck or anything like that. But I asked the chat, I got 500 some votes, like, who are you guys using these days? And 510 votes, 46% said Gemini.
I think Gemini is better for thumbnails. I think Gemini is better for video overviews. I think ChatGPT is still better for research.
And you're still no bueno on Grok.
Yeah, I'm not a Grok fan right now. No. So let's get the people what they came for, Matt. The market is up. A couple days into 2026. Today was a pretty interesting day. Ethereum inching up toward 3,300. We have Salesforce up 2.5% today. Got Amazon up 3.5% today. HIMS, which I want to talk about, just put out an article on a little company called HIMS. Starting to get a little interested, up 2%. Nebius, a chat favorite. And no, we will not be apologizing to Grok. Grok should be apologizing to us. Nebius up 8% today. 8%.
What are you going to do with that, Steve?
QXO almost hitting 24.
You have a pretty decent position in Nebius, though, right? People were asking me yesterday.
I'm a shareholder in Nebius.
A large one or just a little bit? Building.
Depends what your definition is. SoFi giving back all the gains.
Yeah, what do you think? How do you feel about this? I know you're a big SoFi guy.
So
what are they doing with all this money? This is like, what, the 5th or 6th time they've hit the ATM?
So the news was that it's trading lower after an announcement on the exercise of underwriter's option to purchase shares in a previously announced underwritten public offering. I want to see what they do. 54.5 million shares, priced at $27.50 per share. I mean, let's see what happens.
I just don't. I mean, how much money have they generated from these ATMs?
What was the first one? A bill 5 or so? Something like that. Bill 2, a bill 5. At this point, I feel like SoFi is going to make an acquisition. I could be 100% wrong. I don't think that they need to, with how much their deposits are growing. I don't think they need to raise this type of capital unless they're going in for an acquisition.
What particularly though? Like, would they go for software? Would they go for more of like a standalone bank to try to knock some out? Because at this point, they're climbing, aren't they? Like getting close to top 20 banks in the U.S.
By deposits, I'm not sure. I'd have to look. I would have to look, but I think that this is a nothing burger. Complete nothing burger. So now that you've had some time to digest,
Yeah.
what are you thinking today about the whole AI landscape? NVIDIA and AMD, I feel like made a big splash last night.
Well, I didn't. I know that you reviewed earlier today, which I didn't get to watch because I was trying to convince people that I do work at the office. You got to give me the breakdown. What did Lisa Sue say last night? Or was it today that she had her keynote?
Well, they both went on CNBC, and I was working, so I did not watch it. So I'm interested in watching it. But she came up with a term that I am very excited about.
Okay.
Yoda flops. That's the new terminology, Yoda flops.
But what for? I don't. I'm not following.
Yeah, neither am I. It's just Lisa so.
Okay. Yoda flops. There it is.
Yoda flops.
Are you silly question? Because we talked about this. I wasn't certain how quickly these pieces of software, not software, these data chips and these 6 products and SKUs that they just released were going to show up. Amazon said, "Hey, we got them." Are you surprised?
When Amazon said what?
I said we got them.
Got who?
They got the Vera whatchamacallums, Rubens.
Amazon has already got Rubens?
That's what they said. Maybe I misinterpreted the headline, but
I did not see that, but I did not see much. So I didn't
Yoda
realize,
flops is like a bigger than like a petaflop or something. Okay, that
yes,
makes sense. Got it.
it's more zeros.
Jesus, I haven't heard the term Yoda. I thought you meant like they were referring to the AI robot. Yeah, like that exactly. You're first.
That's right. Yoda flops on the couch, on the desk. Look, it's going to be interesting. I think we need so much more compute. And after hearing what they said and the way that they're building stuff, these new full rack designs, and here's what gets me a little bit cautious for other companies. The fact that these new rack systems are all liquid cooled, are they building that themselves or getting that from companies like Vertiv and Eden? Because if they're already shipping this cooled, then that's just so much more streamlined. So I got to tell you, they surprised the shit out of me last night with the big racks. And I do think that these hyperscalers, we're going to hear on the Q4 conference calls that they are full-blown upgrading and expanding CapEx. Last night actually made me more bullish on NVIDIA.
Well, I mean that was obvious. I don't know if Hot Steve is never not from what I've seen, but yeah, this is basically saying AWS is officially committed to deploying NVIDIA's Vera Rubin AI chips within its data infrastructure, announced in full production during CES 2026.
Yep. So I don't think they took
AWS is the first major cloud provider alongside Microsoft and Google confirmed to offer Vera Rubin based instances.
Yeah.
You're here first, Steve.
They're all going to upgrade. I'm telling you, the TPU craze, is not going to matter for these companies one bit. I really don't think so. I think it was all overblown, and I am considering doing something pretty stupid.
Before you end, because I'm very curious about what you just said something stupid. Key features. I think that I love Jensen, but I'm not smart enough. Chat ban Chris Patel. I'm tired of his nonsense. No, I'm just kidding. But some key statistics that I think really simplify this compared to the Blackwell is so performance delivers up to 5x the AI training compute compared to Blackwell, which is insane. So the training ground much better, which I didn't fully comprehend that last night. So is that true? Or is that just like Gemini screwing up? Performance is really 5x?
They iterated something along those lines.
Okay, so they're capable of reducing inference token costs by 10x and training a large mixture of experts models with 4 times fewer GPUs. So it's cheaper, less GPUs. And it's especially engineered to handle advanced agentic reasoning and long context AI workloads. Now I'm kind of curious, what you specifically are you thinking about doing that's stupid, Steve?
I mean, I'm thinking about closing out a few positions and throwing it back into NVIDIA.
Which position, Steve?
I'm not sure yet, but I don't think I'm bullish enough on NVIDIA at this point. I really do think that if Lisa Su is right and we need 100x more compute, and if Jensen is right, that we are going into physical AI rather than customer AI or whatever he said, that we're going to move from chatbots and images to physical with robots and FSD.
Mm-hmm.
I can't see the CapEx spend decreasing for at least several years at this point. Like I may have to rethink my timeline again. And I'd love to pick Tanner's brain since he's out there and Amit's brain since he's out there. But everything that I heard from them last night just makes me think we're still, and this is crazy because NVIDIA is a $5 trillion company. And the hyperscalers are generating hundreds of billions in revenue already. They have massive backlog, but we could be in a situation where we're actually still early in this investment.
Mm.
And I think that this could carry on. I really do.
Yeah, I mean, I think that's what Lisa was talking about, right? I think you and I were chatting, I think this was yesterday, about potentially 27, the trade going into 27 and really starting to, but she's thinking it's 28 and beyond, which that's pretty insane to think. I mean, are you starting to believe that? It sounds like you are starting to believe that.
Yeah,
People are saying you're all talk, Steve.
Yeah, it's funny. Steve, how much more evidence do you need for NVIDIA? Seriously, like I have a lot of NVIDIA, guys. I'm just considering buying more. Like I'm more bullish than I was, and I was already really bullish.
So in between, so you have 0, you have $10 Matty Moolah NVIDIA shareholder, and you have Tanner. Where are you?
Well, I'm definitely
being like 40%.
Are we including ETFs or not?
Just your direct position.
Just direct holdings?
Yeah.
NVIDIA is.
I mean, you don't have to give a percentage, but
it's a top 4 holding.
And why? What is? Let me. I don't. I'm not trying to say you're right or wrong, right? So I'm not trying to like influence you. So don't get nervous. Why isn't it the number one?
I don't think it's. I actually don't know which one's number one. I don't think it's number one only because we've had Meta for so long.
Ah, okay, got it.
I don't have a fancy spreadsheet like you with every account on one spreadsheet.
Sounds like I'll do it for you.
I could do it also, just don't want to.
$10 a month, Steve. I'll do it.
Oh, listen. In all seriousness, China coming out, wanting more GPUs than NVIDIA has. These new racks are going to start shipping. FSD, Hyundai now saying that they're going to take the fight to Tesla robotics. We may be incredibly early.
Could be. Yeah, I could be an idiot, and my $10 position might grow to be a $50 position because it 5x's. But a 25 trillion, sorry, market cap.
So here's what I'll say. Everybody thought it was crazy when Apple and Microsoft got to $1 trillion market cap. Okay?
Yeah, I remember that. That was like
everybody thought it was crazy. Everybody said that it's going to go down. It's going to go back to 500 billion. This is insane. Every new milestone gets broken at some point, and people complain. Then we went to 2 trillion. Everybody said it was crazy. Then we went to 3 trillion. Everybody said it was crazy. Then it went to 4. It's crazy, and now we're at 5. So this has already happened 4 times after hitting $1 trillion. So why can't it keep going? I mean, these companies are just going to expand revenue and just expand profits. So
I don't think you're wrong. What do you want to get Mr. Patel's take? Should we invite Mr. Patel?
Yeah, we can.
These thumbnails are out of control, bro. I just opened up YouTube because I was about to send him something, and I just see your thumbnail, and you're a champion, Steve. Steve, I'm on the warpath to 20K, my guy. Thank you guys for the love and support. I entered yesterday at 18,793 subs, and I am now at 19,133 on the warpath to 20K. I can't believe it. That was not in my cards for 2020 2026 was, literally last month, December 17th, I was at 18K, and now I'm on the warpath to 20K. You guys are amazing.
Sooner than later, Matt. Sooner than later. We both got to get to
bag is back, Steve. Are you excited?
We both got to get to 100K.
100K, I quit my job. I work for you.
Don't pull a Jonah Hill. Don't pull a Jonah Hill.
You show me a YouTube channel with 100K, I quit my job right now and I work for you.
That'd be fucking great.
Would you sell SoFi? Any SoFi shares? Are you willing to disclose what shares you'd be willing to sell? What companies? Or just trimming those companies?
I gotta go through, and I'm thinking about consolidating a little bit. So
consolidating works.
Yeah, I'm. The more I think about it, I'm going to get out of some of the spec plays, and I may even get out of some of the. I can't believe I'm going to say this. Some of my income plays.
Hey man, I mean, I guess the thing with the income piece, and I struggle with this as well. I'm not saying you're right or wrong in that, but the thing I struggle with, and hey, Mr. Patel, good to see you. Show us your face. And I know he's immediately gonna pop off and say dual streaming is for the worst and map money to zero and all that. But before I let you say that, you're still working, right? And I don't think you'll ever retire officially. Maybe, I don't know. I don't want to speak for you, but the problem that I always go back and forth with is like if I need income, I could always sell out of my growth plays and then move it into income. But at the same time, you still have some really good income plays that grow with time. So I don't know. I always struggle with it.
Yeah, I mean, the way I'm looking at it now is there's a lot of stocks I think are undervalued and a lot of stocks I think can do well. After last night, I think that the Mag 7 are going to take the market higher. And even if we get a everything rally, like I think is going to happen, I think Nvidia, Microsoft, Meta, Amazon are going to outpace the value companies, and I think there's less reason for me to be in them at this point.
Christopher Patel. Is his mic working? It's not working.
Working.
Oh, there we go.
You're
Think
both
we
about
hear
to
you.
get a lecture real quick. Please, for the love of God, stop simulcasting. Because then, like, I don't know which chat to talk in. Because half the time the audience doesn't know like which one it is, and I get it. Both y'all are trying to grow. I am. Look, the one thing I've always been is I've been supportive of both of you guys. I've been supportive of Ahmed. I've been supportive of Tanner, Tevis, all of this. But whenever you guys do this simulcast, like I feel like I'm like it's like two different chats at the same time, man. You know, just y'all have to help each other, support each other. Just, I get it. You want to grow, but I don't know. It's just weird, dude. It's one of those things that just it's a pet peeve of mine because it feels like I can't talk to one chat and then then the other part of the chat is completely like lost on what someone is saying in that chat because it's two different things. Sometimes on SoFi Weekly, I'm looking at this thing. There's like 4 people streaming at the same time, and the thing is, all of their growth is compounded. But I suppose it's like I said, it's just this is the same thing we dealt with other people. And dude, we're all friends. We're supposed to help each other grow. And one of the things that you don't do is like I don't know how to describe it, but it's just that's it. How's your day going, guys? Besides that, that's my life.
Well, we brought you on to hear about your thoughts with Nvidia.
Nvidia is going to do well. What else is there to say? Brad Gerstner did a video on it today. He's long on Nvidia. He was buying massively at the 170s. Yeah, I mean, they're just generating way too much money. They're generating a ton of free cash flow, and Jensen is being smart about diversifying. He's investing in other high growth areas that could theoretically be very value accretive to Nvidia shareholders. That's not necessarily just dependent on this AI capex cycle. So
do you foresee this going into 2028?
I mean, it's not up to me. It's what the market is going to be willing to demand at the end of the day when it comes to its growth. I mean, it's hard to endlessly repeat 50% plus growth numbers endlessly, right? Like we all know that eventually the growth cliff is coming. So what are we going to do then, right? So is 30% going to be enough? And at the same time, it's like I said, it's something that that we're just gonna have to figure out together in terms of like which multiple like whether or not there's gonna be multiple compression. Brad Gerstner had a good point in saying, look, you're pretty much paying Nvidia like 22 or 23 times forward earnings. So clearly this is not a multiple expansion story. It's just an earnings expansion story at this point. So I think that to the people that think that the multiple is going to expand to 35 probably are going to be very disappointed. But the people that understand that earnings are going to go up by a significant amount and use that as the baseline for getting your end of year targets, I think a lot of people are going to be pleasantly surprised.
If they come in with 65 billion in revenue and China hasn't even started yet, they're trading it 25 times theoretically this year's earnings because their fiscal year just ended. So 20 times next year's, and that's before the street takes up the numbers. This is a crazy story, and I just think that I'm about to get out of other companies and consolidate into Nvidia. I just don't see a market where this doesn't hit 250 this year, and I'm on the low end after talking to Tanner and some other people. I mean, they're convinced this is going past 300. Chris,
yeah, I mean,
where are you on that price target range?
I'm at 250. I don't know where he's getting that 300 number. I mean, could it get to 300? If the market is like, yeah, we'll start paying a 35%, 35 forward multiple again. Like, yeah, maybe. But I don't think that the market's willing to give it that, especially when you know that the growth cliff is kind of coming in 2027 and 2028. And that's not to say that Nvidia is not going to do well. It's just, it's a law of big numbers. Like, how much money do you think that there's out there in the world, right? And the good thing is, the longer it stays in this consolidation phase, which has been in the last 6 months. So if you look at Nvidia's stock chart over the last 6 months, it's pretty much been flat. The entire time, Nvidia has been buying back shares at a pretty brisk pace. So that does help its forward earnings, earnings rate, right? So imagine right now you're buying back shares at a 35 multiple, which is like, let's say 220, versus you're buying back those same shares at like 170, 180. Of course, for shareholders, that's going to mean that you're getting back a lot of that capital at a cheaper price, right? So whenever your multiples are contracted, that's usually the best time to buy back shares, because the buybacks are way more impactful to your future earnings. So it's almost like a spring that gets coiled. You typically want to buy back a lot of shares when your forward earnings forward earnings multiple is not nearly as high as it was before. So right now, Nvidia, they've got top line growth, they've got cash flow growth. But once again, that growth is slowing down. It doesn't mean it's falling off of a cliff, but it does mean that, it's probably going to go from this year. I think they're supposed to be doing 60% year over year revenue growth. And then next year is supposed to be like 30 to 40%, depending on whether you include China or not. And then the year after that is probably going to be closer to like 20, and it might stabilize around that 20 to 30, in which case it's still a 25 multiple plus all the share buybacks and everything else that they're doing makes this, pretty attractive place to be for the next at least 2 to 3 years.
Chris, did you see, and Matt, did you see Tesla down 4% today?
I did see that.
Matt, you're ridiculous. By the way, you are getting ridiculous with this. That is such a great. Can I show this or not?
Yeah, show it, dude.
All right.
How
So
good
this
is
is
that?
what, guys, this is what I have to deal with. Okay. So if you heard my computer ping, it's Matt sending me this. He is just seriously. How great is Gemini, Matt?
Gemini's fucking absurd, dude.
Gemini.
Chris, are you looking at this?
Yeah, man. I've seen it. It's like, I use Gemini pretty frequently now. Like, one of the things that I like doing is political and financial commentary on Twitter. And what I'll do is I'll take my thought and I'll put it into Gemini and create like a cartoon, and I'll post that to try to explain the message. And it usually comes off as somewhat satirical and comedic, and it's actually kind of cool. So I use it for that purpose.
So do you think that the NVIDIA Mercedes-Benz collaboration is going to impact Tesla, Chris? 1, 2, did you see what Hyundai came out and said?
I didn't see what Hyundai said, but Nvidia is really trying to become like the arms dealer of this AI world, right? So he knows that one of the things that you need to do in order to keep the AI growth story going, like for Nvidia, is you need to be a weapons provider and a tools provider to everyone else, right? So even though Tesla is a big I'm sorry, is a big consumer of NVIDIA GPUs, NVIDIA is also like, hey, listen, I'm gonna make sure that there's other competitors out there, like in the automotive industry. If, let's say, NVIDIA becomes the default standard, Elon is already doing his own custom chips for Teslas, but that leaves a huge market that's open for all the other OEMs who don't necessarily have the same talent and resources to commit to investing in autonomous driving. And if NVIDIA is able to kind of like help them along, and they become part of that NVIDIA ecosystem, that means that NVIDIA is really, it is doing right by its shareholders, which is what you want to see, right?
Oh, I am. A lot of people were getting on me last night about thinking the Mercedes-Benz demo was not great for Tesla. This is even worse now, because within the past 24 hours, Hyundai and Boston Dynamics are deploying humanoid robots. Tesla's not moving quick enough. And I think the valuation on Tesla is insane right now when I look at it. Elon needs to get out and do something.
I mean, you got to give Elon one thing that other companies like, you know, Boston Dynamics is not new to this robots game, right? They've had robots for quite some time, but they've never been practical enough to actually make it a user application. Now, this iteration looks a lot more likely to become a thing. The only challenge is in real world scenarios, how often is this actually worked out? Like NVIDIA's like autonomous driving program is not new. That's been around forever, right? Like I think for the last like 7 years. Yet, when have you heard like a autonomous car company outside of Tesla that's really like gotten a ton of attention, right? So I think a lot of this stuff is NVIDIA is doing its part to kind of boost up its own like ecosystem, but that doesn't necessarily mean that they're gonna at the end of the day win. You know, at the person who's the company that's gonna win autonomous, and it's probably not going to be a winner takes all, to be honest with you guys. I don't know what you guys, I'd love to hear your takes because, you know, you've got Zoox, you got Tesla with their stuff, you got Waymo, you got not Chevy Cruise, you got like the GM partnership with Cruise, which probably is not going to go anywhere, but once again there still is competition. And then there's Nebius has that company Avride, you know, who's been testing their stuff. So
Yeah.
it's kind of crazy to see like so many companies are doing it now. I think everyone automatically kind of wants there to be like a default OS kind of situation, like Microsoft, right? It's like Microsoft is the default OS for 90% of all PCs in the like, you know, personal computers on the planet. I don't know if that's necessarily the thing that's going to happen to autonomous driving. I personally think all of these things, hopefully one day all of these cars talk to each other, because if they were able to do that, you would get this unlock of efficiency on the roads where each car is almost like giving the other one information live, that the reaction times on the cars could be pretty amazing, you know, pretty like super low latency would be amazing. Because let's say a car in front of you is braking and you're only about 5-10 meters away, the car behind you already knows that this car is braking, and so it can start braking. And so what happens is you prevent that rear end collision, which is probably like one of the highest rates of death among people. Where like I had this happen to me while I was driving last week, where the guy in front of me, he like something had just come up in front of him, like I think it was like a tire that came off of a truck. It hit that guy, he hit the brakes, and I was following behind him, and luckily for me I was, you know, fast enough to hit the brakes, and so I hit the brakes and, you know, prevented the accident. But if let's say I was only about 5, maybe 10 milliseconds late, it probably would have been a pretty bad rear end collision, you know. And it's like I said, it's not something that is the fault of the driver in front of me, nor is it my fault. It's just part of those situations where something happens on the road and we all kind of get stuck in this. So if we can somehow prevent situations like that from happening, I think that would be a huge unlock in value for everyone here who's probably in the chat. Like, you guys know what insurance rates are like. If you can reduce down the number of accidents, that would be huge for everyone. So I love the fact that like autonomous driving is becoming a more like real thing now. So I just hope that all of these guys eventually hit some sort of like collaborative environment where they all kind of talk to each other, and the cars all eventually talk to each other, so that we can kind of move into a nice like I don't know, utopia of road driving, like safety.
Well, somebody's go ahead.
Sorry,
Matt.
go ahead. No,
No,
you
go
guys. Well, I was just gonna chime in. I mean, I like that idea that cars will be able to communicate with each other, not necessarily because they're braking, but we saw yesterday the basically intake of all these video cameras that then are able to make a simulation. And so it's like if you have a parked car or another car and there's a child or pedestrian walking in front of it while you're driving, it might be a blind spot for your car, but not for them. And if your cars are able to communicate and add it all to that one large simulation, then, you know, it'll be able to see behind that car. And so then your car will automatically know, hey, there's a person behind this and it looks like it's walking across the street, versus where you're driving and your perspective might be a complete blind spot. And so, yeah, like simulcasting, I think that's a great term for it. You're almost like being able to share each other simulations and recognize where things might be that other cars might not be able to see behind those cameras. And so you almost get a much larger image of what's going on in, let's just say, a 50-meter radius that allows each individual person's simulation to kind of connect up to each other and therefore make a more, I guess, integrated simulation than strictly just utilizing the cameras from your POV.
Yeah, and you guys have seen like the whole thing with what is it called? Like bottlenecking, where one car slows down and then the car behind it slows down and another car behind it slows down. And basically it causes like this cascade of lumpiness of people slowing down. And then you get past this like point, and then all of a sudden there's like no traffic for the next like 5 miles, right? And all it was just one car that maybe had an issue that had to pull over to the side, and now everyone is braking, and that braking pattern goes back like 5 miles. And it's so annoying to see that, but that's, so if, like I said, we get to a position where eventually we get this connected car ecosystem, which I definitely think is a reality. Like, I feel like the technology now is catching up to these possibilities. Like I see, and this is one of those questions that I think they asked Jensen, which was actually kind of curious, which is, what do you see the next 5 years looking like? And I'm like, well, with all of these advancements in AI and GPUs and everything else, like the cost of computing and intelligence is going down by a significant portion. Like, what kind of disruptive things do you guys see happening in the next like 5 to 10 years?
Robotics is number one. Somebody sent me, people were trying to convince me last night about FSD will work in New York City, and they sent me these videos. The videos looked like they were done in the middle of the night. Like they were not done during the day. Like I am still not convinced FSD is going to work in New York City. I mean, Chris, you've driven in New York City. You've driven on the Bell Parkway and in Brooklyn. Do you think that FSD, like in the next year, is going to be good enough for that?
No, there's just too much. Like, there's just too much going on, and the thing is, like, the FSD would have to keep recalibrating itself. Not to mention, there's probably like so many other little things in New York that probably would require lidar I mean that Tesla just does not want to put into it. Like New York City, first of all, the road conditions themselves are horrendous. The other problem is, like with Tesla, how they want to do like self parking, bro. And Steve knows this because how many
Yeah.
street signs are out there in New York City where it's like Chinese was that Egyptian hieroglyphics, like you can't park on Tuesdays from 2 to 3, and then you can't do this and you can't do that. Street parking is closed from this day, and then street sweeping is on here. And literally the city is always changing these things, so you can't even get like an updated map. Half the time you're parked, like anyone who's driven into the city, half the time you're parking, you're literally worried you're gonna get towed because of just how retarded the place is.
I'm not saying that it's not going to work. I'm just saying it's not going to work this year in 2026, maybe even 2027. It'll work at night when there's not a lot of people there. You won't catch me getting in an FSD car in rush hour. That's not happening. I drive through rush hour 3 or 4 times a week, been doing it for a very long time. FSD is, I'm sorry, I'm not seeing it. I'm just not seeing it. Like, I don't think people really realize what bumper to bumper traffic down Second Avenue really is. Like, they just think about driving in open road or low congestion areas. It is going to be so difficult to get FSD to work in these areas that, for me, the biggest thing transformational is AI and robotics. It's not FSD.
Here's a question. Have you asked Amit to drive into the city? Like, has he ever driven into Manhattan like during the day?
He takes the path in and then meets me. I mean, if he drives, I'll get in his car and, give it a whirl. But I mean,
like, I've never seen anyone do a Tesla live stream during rush hour in New York City, and seeing if the autonomous car could actually save you time and Like what is the number of like what is it called? What is it called? Like the interventions that the driver has to do?
I mean,
You
there's so
know?
many of them. The problem with New York City is the amount of bicyclists now with all the city bikes is insane.
Oh yeah, yeah.
I mean, there's just a lot going on. I just don't think FSD is ready for it.
Oh, someone in the comment section on, I guess whoever invited, like Steve invited me. So I drive into the city with FSK. I'm guessing it's FSD a few times a month. Not perfect, but much better than you think. Like I
Chris,
said, the name of this
whoever you see is both chats. You see both chats on this.
really
Yeah, on StreamYard, you see both chats.
okay. Oh, that's interesting. Okay, that's good. That's good.
Yeah, look, we'll see. I think that Elon needs to get Optimus up and running sooner than later, especially with Hyundai coming out. Robotics is going to be the future, but the more I look at this, I really do think that this is going to be a very big tech rally again. And I know I'm starting to sound like Dan Ives, but this is where the money's flowing to.
So one of the things that I found, and you know this, Steve, I've been looking at that damn cape ratio and like getting annoyed, right? Because I'm like, man, this freaking cape ratio is all the way into the 40s. That means that we're probably going to get negative returns for the next 10 years. You know, there's a part of me that gets nervous with that. And I'm not saying that, you know, that thing is perfect, but I found some flaws in how the number is calculated. And I don't know if you know, do you know how the CAPE ratio is calculated, Stephen?
Remind me. I haven't looked at it in a while.
So essentially, what they do is they take earnings for the last 10 years, they take inflation for the last 10 years, and they kind of adjust it to see like what kind of like return that you're going to get based on that, right? So the problem is we've had such a distorted market over the last like probably 5 years that the data that's coming across may or may not be as valid as it was previously into like the 1950s, because the way that Robert Schiller created this report, right? So it's called the Schiller CAPE ratio, is that they used 10 years back worth of data, and they did that for, you know, going all the way back into like the 1950s and before that. So the data essentially pointed towards, you know, like what is, and the end goal was to find out when the market is expensive relative to historical returns, right? So if you've had a certain level of returns over the last 10 years and then the inflation has been a certain amount, then you're kind of expecting that, hey, in order to me to generate a real return, I need X amount of, you know, X amount of the valuation on the companies that I'm investing into have to be worth X, right? So the challenge here is that we're in this weird like dynamic where the last 10 years worth of earnings have been distorted by COVID when it first came out. And then we've added this distortion with the Russia-Ukraine war situation where they invaded and inflation skyrocketed. So one of the things that you guys know Jeremy Siegel is, like professor from Wharton. So
Warden.
yeah, so he actually worked with, I think he worked with Schiller, with what's his name, Professor Schiller, and basically there's something called the excess excess cape ratio now to kind of adjust for that weirdness in or how do I say distortions. And I mean, the market is still overvalued. Don't get me wrong. Like, but it's not nearly as bad as it is when you look at the standard CAPE ratio, which is the CAPE ratio, like at peak during .com was 44. Right now, the peak in, well, not the peak, but the current CAPE ratio is 40. And with the recent run up, it's almost 41 now. So we're really close to what the CAPE ratio was during the .com bubble, which is what's scaring a lot of people. But what's different about it this time, and I know I hate to say that word, like this time is different, but
Oh, it's
one of the,
completely different.
yeah, one of the biggest differentiators now versus back then is that the market leaders are actually generating tremendous amounts of cash flow. They're profitable businesses. They're not just relying on, you know, like money from VCs like
But
we saw.
Chris, why do you even care about that ratio? It's an outdated ratio that doesn't matter. And looking back 10, 20 years is irrelevant at this point. The market has changed so much.
Yeah, yeah. Well, the reason why is because you're always trying to flag different indicators, because remember, even if you're not particularly interested in it, there are companies, there are funds, there are investors that are focused in on stuff like that, right? So when you ask people on the street, like, hey, where are we in terms of like the market cycle? If they're following something like this, in which case they're all saying, hey, this is overvalued, you have to take that into consideration for sentiment, right? So right now, everyone, the reason why Nvidia is at 170 and not at 220 is because sentiment is like, oh, wait a second, maybe Nvidia's growth story is actually going to slow down relative to something like Google and its TPUs and Amazon and its stuff and everything else. So, it's not necessarily just important to get your view as, hey, I think this company should be X, but it's, hey, what does the market think this company should be worth? And when you can find that distortion where the market is either mispricing something to the low side and something that's on the upside, that's where you make a tremendous amount of money. Like, here's an example, and this is something that I've spoken about. Like, look at Carnival Cruise Lines, right? At one point, Carnival, like, I think 3 years ago, was worth like $6-7. Now it's worth $33. That's a huge return, right? And the thing that the market was just not pricing for was a recovery in business, and at the same time, they weren't adjusting for the debt stack and the debt capital structure that that Carnival had that was actually value creative to shareholders. So the thing is, the market was just saying the cruise lines will never recover; they have too much debt. On the other hand, we as investors, we figured out early on, hey, wait a second, no, there's actually some possibility here that the market is getting things wrong, and both of us, all three of us, have found opportunities like that, and which is why we're sitting on tremendous amount of gains, right? And sometimes you call it wrong, like I've called it wrong on certain things, but that's just how it is. Like, Matt, you've called Rocket Lab 100% right. You called what is that thing called, SoFi, right? When it comes to, well, technically that was Tevis, so you gotta give that credit to Tevis, not you. Sorry. What other ones have you, like Palantir? You guys stayed in Palantir and you guys killed it on that. So
Chris, I gotta stop you for a sec. Matt, I'm gonna show this to everybody. Do you care?
No.
Chris, this is what Matt is freaking sending me while you're talking. You ready for this?
What is he sending you? Gemini stuff? Island time? The milkman and the Daisy guy. I'm glad you made me skinnier, bro. My Buddha belly be sticking out just as much as Steve's, is not, if not more.
Freaking Matt.
I love it.
These smiles are great.
We gotta use that. Save that
I gotta save it. I'll send it to the group chat.
Yeah.
So,
But the point is, we have to understand what the market is willing to pay for something, not just what we're willing to pay for, because eventually that is how the stock, that is how the company's going to end up performing, right? Like, I can say, hey, I think Palantir should be $50 a share. Doesn't mean that the market is willing to accept that, in which case now I'm sitting on a bunch of goose eggs, right? So
I'm with you on that. There's always pockets of the market that get expensive. For me, looking back at those ratios, the only one I truly care about is the current PE ratio of the market, because I want to know what earnings it's trading at. And I don't even think that we're expensive right now at 29 times. I mean, at the .com, we were at 46.5 times before it popped. During the financial crisis, it shot all the way up to 116. And in 2021, it was almost 40. It was 38.5.
Wait, Steve, but no. So that's where you're getting it distorted, though. Remember what happened. Both of those times, earnings fell off of a cliff. That meant the PE ratio spiked, right? So remember, if your earnings was $5 and you were trading at $50, your PE ratio was 10. But then if your earnings, because we had that massive credit event, went down to $1.
The market went down and made the rate. No, I get it. I'm just saying that at 29 times, this is not an expensive market when companies are more profitable than they've ever been, and they're growing at the rates that they're growing. I mean, the reality is Nvidia growing at 63 times or 63% year over year revenue, and the Mag 7 putting up the amount of ops cash that they're doing and expanding at the rate that they are. I'm just not seeing that this is an expensive market. I think there's companies that need to get chopped in half, but I don't think that means that this is an expensive market.
I definitely
Yeah.
think there's definitely companies that'll get chopped in half as well. When people realize that the AI piece, there's a subset of companies that are actually going to be able to excel, and then other ones that are just talking the talk, you know,
Yeah, I mean,
and not actually going to show up.
like, look, can you put up a chart of ServiceNow for me, Steven?
Yeah.
I think that's a clear example of people got into this company thinking that it's the best company ever, and it's doing its thing. Okay, like there's nothing bad you can say about Bill McDermott and ServiceNow. Like this is a great company, great product. But if you look at this over the last 5 years, it's underperformed relative to a lot of other places, and now it's on this structural decline, not because it's not doing well. If you look at its revenue, it's still growing at a pretty brisk pace, around 20%. But that revenue growth rate has come down significantly from the past, where it was growing its revenue like, I think at some point it was actually growing at 100% year over year, and then gradually kind of stepped it down to now 20%. And so the market is just saying, well, the growth rate is lower, so we're not going to give you that crazy multiple anymore. It's still trading at a 90 PE right now, and so they're still doing a ton of share buybacks and all that good stuff. But look at that growth rate coming down, right? So what would you give this company in terms of on a forward basis if your revenue growth is coming down this much? So
I need to go through all the financials, but
yeah,
from a growth perspective, it's still growing double digits, which is nice.
right. But if you look at like traditionally over the last probably like 30-40 years, like, no, keep that earnings estimate and just go down real quick. So
I
I mean,
just want to see free cash flow so I can have that
oh,
in my
sure,
head. Just give me a sec.
sure.
All right, so operating income. So 4 billion free cash flow, and the market cap is 150. That's a little expensive, but so EPS growth 18%, 19%. Live analysts following it. Revenue growth. Yeah, I mean, if they keep doing buybacks, maybe if it can keep falling a little bit, it becomes interesting.
So go up a little bit. All right. So you see this right here, and this is for the people in the chat. When you look at this company, like one of the best pieces of advice that I got, I actually spoke to a hedge fund manager who basically said, when he does his analysis, he does like 5-year time horizon. So what he'll do is estimate like what the earnings are going to be 5 years from now, and then base his investing based on that. So that this way he kind of eliminates a lot of the short-term noise that comes from, the markets moving up or down. So he's like, historically, software companies growing at about 20, about what is that thing called? 20% year over year in their EPS, which is very doable. Like between organic and inorganic growth of price hikes that they can do, they can easily grow 20% earnings every year for like almost indefinitely, especially depending on how sticky that software product is. So you said a good multiples around 20 times EPS, right? So if you think about it, the stock right now, even if you go all the way to 2029, the EPS for 20 is going to be like 180, right? So this is theoretically dead money all the way until 2029, right? Now, of course, they can have some catalysts that come along that like change everything up, in which case then all of a sudden now like that entire thesis gets thrown out the window. And that's exactly where I kind of screwed up with Palantir, where you could see that Palantir's revenue growth was on a structural decline, and then they just launched AIP and that thing took off, and now their revenue growth is almost 100% year over year, right? So the key is always revisit things, but as of right now, if ServiceNow performs the way that it's performing and these growth targets are pretty much like somewhat accurate, that means that unfortunately, ServiceNow is probably going to be like a dead stock for the next 5 years, or maybe 3, maybe 4. I don't know. But this is not something that, even though I like the company, just doesn't seem like it's a value buy at this price, even after how much did it go down from? I think it was at 200 something at one point. What was the stock? What was the all-time high on this thing?
So it was at 239. But once again,
Yeah.
why would, if you're gonna go value hunting, and this is unfortunately the way I'm looking at this stuff now, why would I even consider service now when I can go buy more Nvidia, even though it's already a large position, and by the same estimates get more growth and
Yeah.
a better multiple on the
Yeah, yeah.
earnings?
That's exactly right. That's the
Like,
way that you would probably make actual real money in this market, which
yeah,
is to say that, hey, wait a second, who can sustain their growth, and what is the earnings growth going to look like 5 years from now? And say to yourself, hey, wait a second, I could, like, ServiceNow is actually more expensive than Nvidia, right?
a lot of companies are more expensive than Nvidia, which is getting crazy.
Yeah.
Matt, what are you looking at?
You mean in terms of stocks or in terms of what
Yes.
I'm doing right now?
Well, I'm a little scared after the picture you just sent about what you're doing right now. What did you just send?
Don't worry about it.
What did you just send?
But no, I mean, what am I looking at particularly? I mean, the thing that I'm cautious about is trying to understand, is Palantir, is ServiceNow, are all these companies continue to grow at the rate at which they need, right? Because I mean, Jensen said it perfectly yesterday, which is they need the Oracles of the world, the ServiceNows of the world, the Snowflakes of the world, the Palantirs of the world to create these agentic agents that are then going to be used, right? I think that people are going to be living in that world rather than the world that they think that we're living in currently. And you need those companies to really be the backbone of being able to structure the data appropriately and work with the data so that people can continue to go about the way that they're currently doing things. And so, or at least innovate and make things more efficiently than the way that they're currently doing things, which to me, things are continuing to be done on like almost in the early 2000s. Like it's 2026 at this point. People need to kind of move on.
That's been sort of the argument against Salesforce and a lot of these software vendors, which is that they charge on a per seat basis, right? So if you have agentic AI coming along, you don't necessarily need as many seats. I mean, that's what I've heard from analysts. I don't know if that's 100% accurate. Like, hey, so if you are doing your pricing based on the number of seats, and then you have all of a sudden you've got all these AI agents coming along and you don't need as many seats anymore, that means that your future revenue is not necessarily going to materialize, right? So if you have a team of people that are all using X amount of products and they're all on the same product, now all of a sudden, you take about 5 people off of that because you've got AI agents doing those jobs. You don't need those 5 seats anymore. And if you don't need those 5 seats, that means that that's less money that you have to pay.
Mm-hmm.
So that's why I think it's such a weird dynamic where I would have thought that AI would have been a tailwind for a lot of these software companies, because theoretically that could have actually lowered a lot of their cost, right? Because now they're, in order to like improve their software stacks and everything else, will probably be much easier using AI, which means their operating like expenses would come down significantly. But instead, what I'm seeing is it's the actual businesses who utilize those software products that may or may not, be willing to pay as nearly as much in a new agentic AI world. And that's one of the reasons why, if you look at Salesforce has been cut down by such a large margin, because just the market's expectation is that these AI agents are, if not like what is it called? If not disrupt these software companies, at least slow down their future growth. And if that happens, then they're just not going to be willing to pay a crazy multiple for it. In which case we see what's happening with Salesforce right now. Does that make sense? Like,
Yeah,
and
to a
then
degree.
And this is why I think, and God, I hate saying this, but I think this is where Alex Karp is actually correct in saying that we're not going to do this per seat bullshit. We're just going to do blanket contracts, right? Even Snowflake is doing it based on consumption. Like, hey, look, you consume this data, you pay, not on a seat per basis. So a lot of these, if you just look up like ServiceNow is trying to go into more of consumption based pricing rather than just doing seat based. But yeah, I mean, like I said, Carp nailed it out of the park when he said, look, these AI, what is it called? Like models are all going to be commoditized. And the best way to do it is just make the best product and then charge a blanket like dollar figure on a contract, no matter how much a person uses or not uses it. Screw it. We're going to get the revenue, and our revenue growth picture is going to look a lot better than the folks that are trying to do this on a what is it, like a piecemeal basis, right?
Yeah, the Palantir model is very interesting. I mean, talking about that, I mean, they have contracts that include like where it's like two separate contracts where it's like you're paying for the foundry in utilizing the software and whatever you do, and then there's like a flat like rate that they will say, okay, for every piece of tokens that you guys use, we pay whatever, and they kind of just like pass on the cost associated with it. And then there's ones obviously where they, you're utilizing your own cloud. Like, as we know, Palantir isn't the one that's storing the software, isn't the one that's storing the data. It's really just you're utilizing. Imagine utilizing Microsoft Excel or PowerPoint, and it's just able to basically be loaded onto an instance, and your data is able to flow through it. But they don't actually store the data. The data is stored in AWS, it's stored in Azure, it's stored in Google Cloud, but basically the actual tools that you're using are Palantir, and that's kind of what you're licensing from them. So basically you're just at that point paying, like you stated, for what value you think it'll save the company. And it could be 50 million, it could be 150, and what do you then pay on an annual basis kind of going forward to keep utilizing that software. It's very interesting. It's one of the things that I struggle with most, as I think you have, Chris, is like, how do you value that? Because if you're not paying on a per seat basis, like you stated, and you're just paying a flat, however many millions of dollars per engineer that's helping support you for the software, then, you kind of scratch your head. Like, how do we forecast out how we potentially have operating expenditures for this company? How do you grow revenue? I don't know. It's kind of tough to think when you go down that route if you're not paying it on a license basis. I don't know.
Yeah, like I said, it's and a lot of industries are kind of moving towards this model where it's more based on outcomes rather than just a set figure, right? So, like, I'll give you an example, like the insurance business, like healthcare insurance business, they're moving to something called a VBC model, which is like value-based care. So instead of like, like basically insurance billing based on the number of, x-rays that you get or MRIs that you get or whatever, now they're saying, well, here's a pot of money, right, per person to insure them, and whatever the fixed contract is to insure that person, that hospital is going to get it. And whether they get one x-ray or they get 15,000 x-rays, we're going to only pay an X amount of money, for taking care of that person. Now, what's good about that is that, it kind of incentivizes like the medical care system to not overdo things in terms of procedures and billing, just so that they can kind of make a profit, right? So if you come in, if the incentive is you get paid based on the number of exams that are taken on you, then your incentive is, I'm going to do 100 tests that you don't need because I need to make a margin, right? I need to make money off of you. But if it's the other way around, which is, hey, we're only going to pay you an X amount of money, your goal is, hey, I'm going to try to get this patient taken care of without having to do all this unnecessary like processes and steps to get them from point A to point B, right? So I'm sure like you guys been to the hospital, you don't want to go into a hospital and be like, oh yeah, we're gonna do like X amount of tests and Y amount of this, and we're gonna do this just so that the hospital can make a margin off of you. You rather just say, okay, this is what I need, this is what my doctor wants to see, like let's get X and get out the door. So I think that's where we're moving towards, like, so value based care. I think Palantir's doing the same thing. So you could call it like value based pricing, which is we provide you the software, you see what the total ROI is, and then based on that, you pay us. And then when it comes time to renew things, if we are actually providing you that the massive ROI that you've had, then you pay based on that number, right? And so this all kind of hinges on the value of Palantir to the organizations. And like I said, if the value that Palantir is providing is immense enough, these guys are going to be willing to pay. And they're not only going to be willing to pay, but they're willing to pay a higher premium next time, right? Which is what these guys are counting on, basically.
What did you think of Amit's question to Sir Jensen? Did you see it?
Yeah, I heard it. It was a good question. I mean, there's a lot of things that like
Can
Jensen,
you bring it up, Matt?
yeah, like
Yeah,
there's a
did you
lot
see it, Steve?
yeah. Yeah, it's on a Stock Market News' account if you want to look at that, or Wolf Financial's account on Twitter. But he basically half the question was like a super glaze on Jensen, be like, Jensen, you're so smart, you're so amazing. Without you, the world would not be good, Jensen. So I was like, bro, stop, man. He's not gonna give you a hand job. Relax, But yeah, so first half of his question was just nonstop glazing, but the second part had some good meat to it. And yeah, I thought it was a good question. But let's all listen to it. Hold on. There you go.
Hi, gentlemen. Thanks for taking my question. My name is Amit. I run.
Hanging out with you guys, it's really fun, actually.
We're having fun too. We are living in the greatest time to be alive with a company that is pushing the limits at every level. It is fascinating every morning that I get to wake up and realize your company. I run a YouTube account and an X account, and my audience is primarily retail investors. Now, my business has exponentially increased over the past 5 years because your company has exponentially increased, and there's just a lot of news to cover every single day. And
we brought a lot of retail investors into the world.
Yeah, and a lot of retail investors have, quite frankly, created generational wealth because of trusting in your vision.
Thank you.
I do a live stream every morning in the morning and in the afternoon, talk about the market. We also talk about NVIDIA every day. When you guys have earnings, we have 25,000 people across the entire world get on one stream to listen to you talk for an hour. Every quarter for the past couple of years, you guys have seemed to beat and raise expectations. Expectations that are very hard to beat and raise. And sometimes Wall Street recognizes it, sometimes it doesn't. My question is more philosophically, how do you deal with the pressure of running the world's largest company, a company that a lot of people are saying should be larger than what it is today, and being able to continuously beat those expectations, knowing that it's not just the average bank that owns your stock, but it's the average retail investor who really does believe that this company has a lot further to go?
Well, first of all, I don't do it by myself. I've got an amazing team around me, and they help shoulder the responsibility. There's no question that NVIDIA today has great influence in the world's technology industries, the supply chains, and the end markets. But what comes with that also is great responsibility, and we take it very seriously. And of course, one of the things that we could do, one of the primary things we could do is to build the best technology the world's ever seen. And by doing so, not only do we stay relevant ourselves, all of our partners continue to succeed, but we also ensure that AI advances in a way, that continues to scale. If AI continues to get smarter, we'll use it we'll be able to use it more productively. That continues to scale. If we drive the cost down, that continues to scale. if we drive energy efficiency up, that continues to scale. And so all of that comes along with technology, and that's our first responsibility. The second part of it is to make sure that we have a rich ecosystem of other companies that are benefiting from this industrial revolution, which is the reason why I'm always on stage with a CEO Sunday. Isn't that right? And every single day. Today I was on stage with Roland Bush, who's the CEO of Siemens, and we're partnered with Siemens across a whole bunch of different sectors of their software. They're the largest industrial software company in the world, and they're just about in every single factory and every single industry. And we're working together to bring AI and revolutionizing how factory automation is done altogether. Everything from acceleration of software to physical AI to AI physics to omniverse digital twins. The work that we're doing there is really broad. And so we need to, the second part of our responsibility is bring everybody along, and our partnerships with Snowflake and ServiceNow, Palantir, Cadence, Synopsys, Siemens, you name them. We want to make sure that everybody comes along. And so I think this, the resilience of the industry is going to be stronger if we're not singular. But somehow this network of ecosystems around the world is moving along with the technology. And so there's a couple of different things that we do, but in the final analysis, we have to keep doing our job and keep beating the quarter and raising the quarter.
There you go. What did you guys think? There was a lot of glazing in the first 30 seconds, right?
Jensen stated on the right.
Whoops.
That was a lot of glazing, right? At first.
Steven?
I said, sorry, I removed the wrong thing. I went to remove Matt's Twitter thing. I thought it was a good question. I thought Jensen gave a good answer, and hopefully Jensen comes on in midstream.
Yeah. No, I think it's inevitable that Jensen's probably going to come on there. I mean, Amit is actually really good at asking questions that help like people cross into what the possibilities for a company are going forward, right? As opposed to just being very like blunt about like, like when it comes to like investigative reporting and everything else, it feels like you're basically attacking the other person. Whereas Amit makes the other person feel very comfortable to kind of discuss things and discuss ideas. So in that regard, I think he does a great job. I think eventually Jensen will probably make an appearance on there. But yeah, I just, in terms of like the question, I think the way that Jensen answered it was actually pretty brilliant in a way where he's not taking the adversarial approach to the business like, some of the other CEOs are, which is we're going to own everything. He's more like, no, we're going to make sure that everyone, gets a piece of the pie, which is good because theoretically that's what he's saying in your face. But behind the scenes, he's actually like, he's dominating the crap out of all of y'all because he's making you all dependent on him.
Mm-hmm. And I think he made it less about himself and more about his company. And, obviously he stated, I'm not the only one, right? Like he's a visionary. He's pushing, but at the end of the day, you still have all these brilliant software engineers that are developing these LLMs that are basically now being open source. And you obviously have these great partnerships with TSMC, and they're pushing the edge on, building these things. Like we saw it yesterday, like they're probably helping fund TSMC in some of these manufacturing lines to be able to get what they're doing done. It's really brilliant. And so it kind of reminded me of like I think it's very symbiotic, like what you're talking about with like how Palantir is starting to do things with also now how NVIDIA is trying to do things. They view LLMs as a commodity, not necessarily the thing that's actually going to generate the revenue per se, right? And then same thing with what Gemini is probably going to be able to do. Like I don't think that Gemini thinks that they're going to actually, or Google thinks that, or Alphabet's going to think that Gemini itself, the actual LLM, is what's going to generate. It's really the advertising on top of the LLM that's actually going to generate all this revenue. So, yeah.
It's interesting how the first company that he said was Snowflake.
I did think that was weird.
That wasn't weird. They even did during CES. One of the first things that they did before the NVIDIA like keynote was that they had CEOs from different companies, and one of them that was there was Snowflake. Like Sridhar was there. I mean, look, the whole point of everything when it comes to Jensen is how do I get as many people dependent on NVIDIA as possible, right? That's exactly what Bill Gates did, and which is why Microsoft is the default engine for PC. So in terms of AI, Jensen's doing the same thing with NVIDIA, right? He's making sure that NVIDIA is at the center of everything, because at the end of the day, he's going to sit there in the middle and collect his cut from everyone. While everyone is collecting the cut from their end users and customers, they're all paying NVIDIA in some way or another. So in terms of building an ecosystem, that's kind of what you want, right?
I think so. I think Steve has something to show you.
I was just trying to make you laugh, Matt.
You're not going to show it?
Looks like I succeeded.
I think it's great.
I think I succeeded. So, Chris, do you know anything about Zeta?
No clue.
Matt, do you know anything about Zeta?
No, but I know Amit has turned onto the company. So yeah,
The amount of people that have asked us to look into Zeta is overwhelming. And I started looking into it, and the numbers actually aren't that bad. A lot of forward growth. I know nothing about marketing. So I don't think I'm really going to be that helpful, but the numbers are actually growing on me.
One of the things that I've sort of like trying to change about my investing algorithm in the last probably like 6 to 12 months is that if someone finds something very interesting and that's something that's in their wheelhouse, let them have that. I'm not necessarily going to start like trying to understand something I don't understand. I've gotten caught on the wrong side of something like that a couple of times. And I think instead of like I'll be very blunt, like BM&R, like I thought BM&R, I could understand it and see it with the lens of a lot of other people. And to some degree, I think I have figured it out. But the thing is, if I don't have my own set of values and convictions in it, like it's just hard for me to be in it long term, right? So I think right now one of the things that I'm seeing with Zeta is that there's so many people getting interested in it. I feel almost like peer pressure to talk about it and cover it and try to understand the business to see if there's something there. And instead, I think the value that I have is finding things that are not necessarily being looked at by everyone, right? And so right now, my key focus over the last probably like 48 hours has actually been Disney. I know everyone's gonna probably like in the chat like roast me like Disney, bro. Like what? But I feel like there's a lot of value there. So
Yeah, but is there really? I mean, I looked at Disney, and you're right. For the numbers they're putting up, it does not seem expensive. The reality is, what can this company actually get back to? Because I don't have the answers on content, but my nephew, his friends, none of them watch anything that's Disney other than Marvel. Like Disney actual IP, how valuable is Mickey Mouse and Minnie Mouse going to be in 5 years from now? I feel like kids these days are all on YouTube and Netflix. And I know it's a much bigger company than that, but just with that portion of it, and then parks is a difficult business. And I don't know. It's a hard company to invest in. And once again, if you're going to put capital, you have X amount of capital, are you really going to put in Disney over in Amazon?
I think there's a place for Disney in my portfolio. Doesn't necessarily have to be like a sizable position where it's like I'm hoping that this thing is going to like provide crazy high returns over the next 5 years. Like this is not your mom and dad's growth story, right? I mean, theoretically, there is like, because of just how the stock has been trading over the last 5 years, there is an options play to be had on this one, especially if they are able to kind of turn things around and the market starts to recognize the value. But that's something beside the point. The whole thing with Disney right now is that I think Disney has been left for dead for the last 5 years. It's not to say that they haven't done okay. Like if you look at the last probably like year and a half, 2 years, they've been on the steady rise. But in terms of market fundamentals, they've completed their Hulu acquisition from Universal. They've reduced down their net debt to EBITDA to like 2 now, whereas when they acquired Fox, they were almost at 5, right? Their EBITDA has been growing. Their linear, like the bleeding from their linear networks is actually starting to subside a little bit. So that melting ice cube is sort of still going to melt, but it's not going to be nearly as much. Their parks business is still generating healthy free cash flow. You know that they doubled their guidance for next year is that they doubled their share buybacks from 3 billion to 7 billion. Their debt is like very manageable now, right? So I think what people are missing on Disney is that there is definitely a story there for a nice recovery. It's not going to be the crazy growth that you're going to see with technology, but like I said, in terms of value, you do want to have some companies within your portfolio that are going to at least provide you a decent return, and that are not necessarily correlated to just the AI trade, right? Like I don't know how you guys are positioning your portfolio, but like I'm sure that you're not like 95% AI companies and 5% everything else. You're going to try to at least diversify to make sure that you're not caught on the wrong foot if something, basically happens market sentiment wise, right?
I mean, the way that I'm positioning now, heavier S&P and heavier tech companies. I mean, I'm looking at stuff, and if I don't think it's going to beat the S&P, I don't want to be in it. And Disney over the past 5 years is down 36%. S&P's doubled. You look at the past decade, it's only up 21%. You could have got 230, 240% in the S&P. I mean, the reality with Disney, it's a company that's turned around. The numbers look really interesting now, but the operating income is not even back to where it was back in 2016. So I don't know.
Yeah. Like I said, you definitely
Disney's
have to,
difficult
you
because
definitely
here's the thing: do we think Disney can double in 6 years? Because if the market can double, which I mean, I think the market's going to double in 6 years.
Yeah, I mean, I think Disney has a definite possibility to double, especially with the concentration of share buybacks that they've had. Like in terms of like total returns, in terms like capital return strategy, they've been prolific, like purchase of their own stock prior to that Fox acquisition, where they had to really cut down on it to manage their debt structure, but then also they had to deal with all the ramifications of COVID. So I think Disney's still a great business long term. They still generate significant amount of cash flow. That's not going anywhere. And one of the catalysts that they have up and coming next year is just how many like blockbuster movies that they're actually projected to do. Like this last quarter, they ended up having Avatar that did almost like 1 billion plus. They had Zootopia that did international like 1.5 billion. And if you look at the future movies that they're projected to do next year, they've got some really, really big heavy hitters on the way. The one that I'm looking forward to, of course, is Avengers Doomsday. Like they're bringing Robert Downey Jr. back. They've got Chris Hemsworth back. They've got the original Captain America in there again. So I think that could theoretically be another, like if especially if they get back into like the cadence that they've had in the past with their Avengers series, they could theoretically do well on their movie production. And then on top of that, they just changed out the director. I don't know if you guys are Star Wars fans, but they finally got rid of that evil, mean, I don't want to say the B word, but that B word, Kathleen Kennedy, who just literally she put like this woke stamp on all of Star Wars and really turned the fan base off. right? So every movie, instead of it being like a sci-fi getaway from your, from the thing, it turned into like a lecture session about how men are like bad and evil and women are good. And it was just it like Star Wars really got morphed into this weird, like, I don't know, like woke progressive like thing. And I'm like, bro, I really don't need to be lectured more about this. Like, I'm fine with just what it is. Like, tell me a good story, right? Like, I don't need subliminal messaging in my brain saying that I'm the world's problem, basically.
Mhm. The thing that I think is the biggest drag on Disney has been kind of the lackluster growth in Disney Plus. Like initially, when you and I were starting to look at it a couple years back, they were having some really good year over year growth, and it's really just slowed down massively. And I don't know if it's because of people cutting Disney Plus because of the woke mind that was kind of going on in the company, or what. And I thought that when they brought Bob Iger back, a lot of that stuff would be kind of nipped in the bud, and it really hasn't. I don't know if it's just Bob's just like I don't know. To me, I think he's kind of ruined his spotless image when he kind of handed it over to Bob Chapek and then kind of had to come back. And he hasn't really turned around the company as fast as I would have liked to have kind of seen. So I don't know. It's just interesting. Noting I didn't know anything about the Star Wars business that you were kind of referring to with respect to the Disney um, Star Wars director. I obviously knew that there was like the woke piece that they were pushing for, but I didn't realize they fired her. And I would be cautiously optimistic that they would move in the right direction. It's just to me and anybody that's listening, you stated specifically that this could be an option opportunity. Could be. I don't think you've entered it yet. Maybe you have, but um, people need to recognize like where their portfolios look. Like for me, this isn't something that I probably would get into unless there was like a deep like drop for some reason to like that would want me to enter some sort of swing trade. But for me, I just don't personally see it. It's banking on a lot of, to me personally, like I would be looking at 5-10 years down the road. Do I see this company being more than a $200 billion company? Yes. In terms of shareholder returns and shareholder yields, they're giving away 4.5%, 1% via dividend, the other 3.5% through buybacks. That's awesome. But to me, I'm kind of sitting here like, what interests me about Disney? And do I love the brand? Yes. Am I, a Star Wars guy? Yes. Am I going to watch the Marvel movies when they come out? Of course. But I've been stuck in Disney before when, the whole hype around Disney Plus came out and the stock went to 200. I didn't sell and I basically broke even, if not made a couple dollars. Would have dropped back down to the low 100s. And, and until they kind of get it out of themselves, I wouldn't put money into it because I feel like until it's on a right path, it'll be dead money. Now, once you start to see, and maybe you are seeing it, maybe you're right, Chris, maybe you're catching it early enough. But to me, I would want to see a couple quarters of things moving in the right direction. And by that time, maybe it's too late. Maybe you lose out on the 10-15% gain on the stock price, or in your case, potentially much larger if you're doing calls and options on it. But to me, I think it's just until you see that turnaround, it's something me personally, I'm not saying that people listening should follow me, but I personally am going to stay away. I think there's better opportunities out in the market.
Yeah, I mean, like I said, this is one of those things that's not necessarily correlated directly to AI. So for me, I'm trying to just balance out the portfolio. And from just a financial engineering standpoint, I think that there's value in Disney outside of just, whether or not you like their content or not, which by the way, and to me, it's like a call option. Like, let's say Doomsday comes out and they hit like Avengers Endgame numbers. You're talking about like $2.5 billion in just ticket sales, and on top of it all the merch that they sell and all the action figures and everything else. Because remember, Disney uses its IP not just to basically show you a movie and get you subscribed to Disney Plus. And by the way, Disney Plus now is actually projected to do about, whereas 5 years ago it was one of their loss leaders, right? Now it's actually projected to actually have an earnings, right? So that part of the business segment is there. They've also got the experiences part. So if you go to any of these Disney parks, they're super expensive, and I know that not everyone likes that, but they're still always packed. Like the amount of money that these parks generate it's insane, dude. And it's not just one place. It's like everywhere around the world has got these massive amounts of experience driven locations that are just very value creative. Their cruise lines, my brother-in-law and sister-in-law, they're taking their kids on a Disney cruise. Dude, the amount of money that they're shelling out is pretty insane. But at the same time, they were like they felt fortunate that they were able to even get a ticket because these things are sold out so much, and they're looking to double their fleet in the next few years. So, if they're able to maintain pricing premium that they've been able to kind of capture over the last, I don't know how many years, and then kind of layer on all this additional growth, that means that there's value there. And like I said, I think it's worth revisiting because when you got into it, Matt, I feel like number one, they were still dealing with the hangovers of COVID, right? Where not everything was not locked down anymore, and then you had worldwide all that stuff. But then they also had that giant Fox acquisition that loaded the boat with debt on their balance sheet. Now that that debt is under control, there's actually real value there that people may or may not necessarily recognize, because as you pay off the debt, that means more of your cash flow is going to be going from, well, less of your cash flow is going to go into servicing the debt and paying down further debt, and instead going to things that are going to be value creative to shareholders like share buybacks and dividends, which, by the way, like I said, from an investing standpoint, that's what you want. So I think over the last 5 years, they've consolidated primarily because people were worried about the debt. But with that debt overhang kind of like diminishing by the day and earnings popping in the other direction, we could see a nice resurgence in Disney over the next like 5 years. But like I said, that's something that you have to just sit there, calculate. The one downside to Disney, to be fair, is they are in the content business. So if they're not able to turn around their content and they're not able to actually generate positive ROI, like let's say they come out with Avengers Doomsday and it's a flop at the box office and they spent a good amount of money to get the ball rolling on it, that means that that's going to go into your losses column. Anytime you're dealing with content creation, you guys know how it is there's going to be times where you're not going to be doing very well. But I do think from the slate of movies and TV shows and everything else that I'm seeing with regards to Disney, there's a strong possibility that they're able to make a resurgence going forward.
Just while no rebuttal from me. Just while I have the floor, I'm just gonna put Chris's Twitter in the chat. Chris, do you want me to put your YouTube as well, or just your Twitter?
No, man, just the Twitter. Like eventually I will. I'm actually considering starting a YouTube channel, but the thing is, like, I come on to your guys' stream and I just mouth off. Like I'm literally like very long-winded. Now, the reason why I never post on my own YouTube channel is because after that fiasco with Palantir, remember when I was trying to do like a Palantir analysis and I left the camera running and I forgot to edit that out? I've had this like weird thing where I just cannot talk to the camera by myself. If I'm having this conversation with you guys, it's pretty easy for me. But like trying to explain things in front of a camera, I don't know why it doesn't work well for me. So I'm trying to get over that in the next like probably like month or two, where I'm just gonna do like for myself, just do like a video and try to do some basic editing around it and then see if it's something that I want to put out. Because you guys know just how much due diligence I do on companies and like how far in depth I go to try to bring like good analysis to it, especially because we talk about it all the time. And you guys are on my Patreon, so you guys know the endless amounts of digging that I tend to do to find things. So yeah.
Yeah, and you have a phenomenal Discord as well. It's really good. You have a lot of good people in there. So anybody that's interested, um, should give Chris's Patreon a good look. He definitely posts some good DD in there and tells people what he's thinking. Much earlier than when you guys see him on stream. So, hot Steve.
Yeah, I'm just getting ready for tomorrow, trying to figure out when I'm going to exit. I am going to be buying more NVIDIA this week. I'm super convinced on it.
You heard it here
I'm
first.
pretty loaded. I have a 7-figure portfolio in NVIDIA, so I'm pretty good. Like I'm not trying to add any more. Like if Jensen doesn't perform, bro, we got a problem. All right, Jensen. But here's the thing. I don't expect to lose money on NVIDIA for one reason. No company that's generating that much in terms of like revenue is going to be held down for longer than a few months, because eventually those numbers are going to be reflected in their earnings. And when that happens, everyone kind of wakes up. It's like it's so similar to like Meta, right? And Google. If you guys remember what happened to Google last year, everyone hated Google for some reason. It was so dumb too, because like you could see that these guys were doing really, really well. And all it took was just one model release on Gemini 3, and then everyone just woke up and said, wait a second, no, Google's actually worth something all over again. And everyone went from like, oh yeah, 15 multiple is expensive on Google, it's search is dying, to, oh my God, like Google has 100 other businesses under it that are making a crap ton of money. Everyone started buying, and then what happened? Damn thing skyrocketed.
I mean, when it comes to Google, think about Roy. Super smart guy, but can't get past the fact that search is not being cannibalized. And we continuously say quarter after quarter that search is going to decline. Search is getting cannibalized. Quarter after quarter, it didn't. And that was the biggest bear case. And I don't know where that bear case came from, but Alphabet is still one of the greatest companies. It was the easiest undervalued play last year when it comes to the Mag 7. And now it's probably close to fair value. It was so undervalued that it just didn't make sense.
Yeah, I think you're 100% right on that, Stephen. Like, would I buy more Google right now? Probably not. I think I have a pretty good position in it right now, and I have spreads on it, so I'm just waiting until the expiration to realize the full value of my investment. But the point is, the times where the market is not necessarily looking at you in the positive light, that's usually times where there's real opportunity, right? When the market is giving you all these accolades or whatever, that means that usually the market is already kind of pricing in a pretty lofty expectations. It's only when the expectations are not necessarily as high that you're going to get a bargain.
Yeah, I mean, look, the reality is the sum of the parts with Alphabet was also an interesting thesis. The fact that it took the FTC lawsuit to get settled for this to start moving was crazy. It was just so undervalued, and that's why it shot up so quickly. So I don't know if there's really any opportunities like that, but I think there's opportunities in the market. Did you guys ever get in on QXO?
Unfortunately, man, that was like one of those things that it was something that you looked into very in depth, but I was so busy looking at other things, I did not look into it nearly as much as I should have. Now that it's gone up a little bit, I feel like I'd be chasing it, but I think I'm gonna just power through the feeling that I've missed the run, and just try to do my own research on it as well. So that
Did you see the news yesterday?
Say that again.
Did you see the news yesterday?
I did not. Oh, the one that that they did a preferred equity raise.
Yeah, Apollo's taking a stake.
Yeah, I heard, I saw that. Yeah, I mean the guy's got a proven track record. If there's one thing that you have to look at, like QXO is not going to make sense fundamentally, because their fundamentals are not.
No.
It's all about believing in the CEO's vision, and I mean the guy has a proven track record of succeeding. So you're basically, you've got a sort of an Elon like situation where the numbers are deteriorating, but you believe in the CEO because the CEO has proven himself to be a capable executive in bringing shareholder value long term. So you'll buy it regardless of the deteriorating numbers. Like, I mean, you look at Tesla, and Tesla looks like absolute trash, but the stock is staying above 400.
I showed the numbers last night. Tesla is so overvalued. It is disgusting.
Well, it's one thing if it's overvalued, but the numbers are deteriorating by the day. You know, that's the part that sort of shocks me a little bit. But and at the same time, it's like the market's saying, no, we don't care. We don't care that the total delivery numbers are starting to kind of like level out. Like they're not necessarily making as much going forward. But the thing is, like Elon knows this, and he knows one of the best ways to kind of counteract that giant wave of contraction in multiple is by making sure that he's promising on the next big thing very early. So he's basically saying, look, the future is ride hailing, the future is robots. And so people are saying, wait a second, like I'm not investing for, you know, the short-term earnings. I'm investing on for 5 years from now, which is the autonomous piece of the equation. So everyone's willing to just overlook the multiple on this thing.
I mean, the numbers were worse last night because Tesla did not drop 4% last night. But the fact that it went down today and it's still trading at 126 times EBITDA, I mean, and it's roughly the same size as Meta from a market cap standpoint, it does not make any sense whatsoever. Like Tesla's one of the companies I think can get chopped in 2026 if he does not come through with FSD or Optimus this year.
I mean,
yeah, Tesla's always been one of those ones where I've always scratched my head a little bit. I mean, I get that their markets are always forward looking, but I don't know. I think until they actually start proving potential for Optimus and how many people, I mean, do people actually think it's going to be selling $1 trillion worth of robots in 2030, 2032? And
I mean, just think about this, Matt. If we go to 100 billion in EBITDA, so if we 10x EBITDA, it's trading at almost the same, just under the price to EBITDA as Meta. But they have to 10x their EBITDA to do that.
I mean, this is where, you know, it's all about how you can basically communicate a story and what people are willing to pay for that story, right? So, and the thing is, like, look, no matter what we say right now in terms of valuation, Elon has a proven track record on multiple companies. So when this guy says he's going to do something, it may not be in the time frame that we all want him to do it on things, but the guy gets shit done, you know. And like I said, he's made a lot of people very wealthy over the last, you know, decade and a half, and those people are not going anywhere. You know, like they're willing to sustain a 50% drawdown. That's not gonna shake them out of a position. So, you know, Tesla has a very, very loyal shareholder base that, like, dude, there's only one other cult that has the same level of loyalty, and that's like Palantir, which is exactly why sometimes, even if you did believe that Palantir was a good short because fundamentals may be going in the other direction or whatever, I just see a whole bunch of retail dip buyers coming in, bro. So I'm like, dude, do you really want to short the story? Do you want to short Alex Karp saying that we're gonna eat everyone's lunch? Probably not, you know.
Guys, I like Elon a lot. I just think Tesla's valuation is crazy. Matt, you got to stop. But Matt, I do have a question for you. How does it feel to be winning the stock draft after half a year?
well, there's something, I don't know who has the underlying, but maybe I can pull it up. You got to pull up that photo that I sent you, though.
You want me to pull up the photo?
It's pretty funny.
I mean, this is going to be Matt's new hobby, just making freaking photos and sending them to us.
I think Chris will like this.
Yeah.
Why does it
Send
look
that,
blurry though?
send that over to Amit, man.
It's freaking great. So Matt, you're up 47%.
I'm doing it. I'm doing all right.
You're doing it.
But your 2025. Are you looking at the spreadsheet? Or are you looking at the website?
Look at the spreadsheet.
Yeah, so I want to see what it's like because the website still has Netflix before the split, so it shows that it's down like 90 something percent, which obviously isn't true. So it has you in last place, and I don't think that's true. So where are you, Steve? Pull it up.
Can you show the spreadsheet real quick?
Did Netflix split? What are
Maybe
you
it's
looking at?
Costco.
What are you looking at?
Am I dumb? Netflix definitely split, right?
Netflix, yeah, they split and ServiceNow split.
Yeah. Can you share the screen real quick?
Yeah, before I do, Matt, what are you looking at?
There's a website.
What website?
Be sure.
No, it's that one's not right. That one's not correct. Like that one was created, but then we never really used it.
So when you click on your stuff, Netflix shows that it's down 92%, but that's because it's the 10-for-1 split that's not being accounted.
Yeah, no. I haven't updated. I'm bringing it up now.
Yeah, I was looking at that because Tanner's numbers look really bad because of ServiceNow, and then I saw like that Steve, you updated it.
I updated Tanner's numbers.
Yeah.
Not Steve.
So Amit is 29.5%.
Killing it.
Matt is 47, and we'll call it 0.5%. Chris is 8.72%. Tanner is 22.5%. And I am at 7.2.
Yeah, dude, that Micron position is really like saving your butt, man.
Yeah, I mean, I took a flyer on MSTR because I thought Bitcoin may do something, and I took a flyer on HIMS hoping I could deal it to somebody.
Yeah.
How's my EOG prediction? It's down like $20. Yeah, not good. Okay, sorry. Go ahead, Chris.
No, it was good. Like my biggest losers, I think, are Axon and Elf. Like, I don't have a problem with Novo Nordisk.
Norvo.
No, Novo is going to do fine. Like Novo is just dealing with structural issues around their GLP-1 medication. But Eli Lilly is counteracting that. So I kind of knew into it that both of them are going to grow over time. Like the valuation on Novo is just purely it's down way too much. So I think eventually Novo's at least going to get back to break even by the end of our what's it called, our time frame. Now Elf, on the other hand, Elf is my only small cap, and I did not anticipate them getting nearly the amount of pullback that they had because of China. And I'm actually kind of shocked at like how Axon's been underperforming the market relative to their market dominance. But then again, like when I double checked their valuation, it was kind of excessive. So I felt dumb picking Axon, like looking back, but it is what it is.
So talking on some people in the chat, and then I know Steven today also wrote an article talking about pretty much these GLP-1s and Lilly and Novo Nordisk. What are your thoughts on HIMS now that you've got a little bit of this headwinds underway, and where do you think it's going to go from here, Mr. Patel? I mean, do you think that it's overblown? Do you think that it's okay? Do you think that ops income will eventually reaccelerate
For HIMS?
Mm-hmm.
I just haven't been tracking HIMS that much. So I can't really speak too much on it. HIMS at one point was able to catch a large amount of interest in its GLP-1, which is the semaglutide, which is the same thing that Novo Nordisk has, but they were able to release it primarily because there was a shortage on Novo Nordisk, so they were able to capture a good amount of market share. the thing is that whole thing is resolved, and people have kind of moved away from semaglutide anyway. They've pretty much gone to Eli Lilly's Manjaro, which is tirzepatide. On the other hand, you've also got pricing pressure now coming from Eli Lilly and Novo Nordisk, where both of them have lowered their prices, and they're pretty much competitive to what the HIMSS people do. So it's almost like, why would you want to go to HIMSS where you could just get it from Eli Lilly directly or Novo Nordisk directly, right? And then Novo Nordisk and Eli Lilly have both kind of partnered with these other online vendors, but not HIMSS. So it kind of like almost like forces HIMSS to be in a defensive position. So I'm not sure how HIMSS is going to react to this. Nothing that HIMSS does, to be honest, is novel, right? Like none of the products that they have are unique to just HIMSS. A lot of the people who love HIMSS as a platform, they're sold on the idea that HIMSS is sort of a disruptor in the space. But for me, when I look at it, I'm like, no, I think a lot of their growth was just tied to their GLP-1 like what is it called, engine, that was temporary, and that now that that's kind of like slowly gone away, I'm not sure like which vector like HIMSS has going forward. Like I'm sure that they're trying different things, but there's also like sort of I don't know if you guys saw this, but there's some sort of like not legislative, but like some like findings that they created a difficult situation for people to cancel, and so some of their revenues may be tied towards that, and so they might have to settle that. I don't know. I haven't done research on these guys in quite some time, but in terms of like what they're doing that's unique to them, I don't necessarily see any moat around HIMSS. I mean, if there is a moat, I'd love to hear it.
I don't think there's a moat. I just, at this point, it's getting more interesting if they can get through these headwinds. The low testosterone and menopause and premenopause for women's health could be interesting. And the fact that they're trying to get into gene testing and proprietary blends, but who knows? There's a lot of FDA regulations. That's why I don't necessarily love these companies. If they can get through these headwinds, though, and the expansion in their facilities that they're doing to increase quality control, maybe something to look at. I mean, the problem is on a quarter over quarter basis, they were doing significant growth and then it tapered off 2 quarters ago. And the last quarter, it grew a little bit, but it's been stale for the past several quarters on revenue growth. So I don't know. And Laura's right. I do want peptides. Absolutely.
Yeah.
Mhm.
Yeah, like I said,
Sorry, go ahead. I didn't mean to cut you off.
no, I'm just saying like there's just sometimes you kind of need a defensible moat in order to kind of maintain that loftiness in terms of valuation. And unfortunately, I just don't see a moat. So the thing is like, what's their next growth vertical that keeps them going? And I just don't see it. So
This one's for you again, Mr. Patel, because you are I believe you're still a holder in ASTS, and maybe you're not. It's been a couple months.
I have it.
maybe a
I
couple
have it.
weeks.
I don't. It's like one of those fire and forget. But I don't have like a. I wish I had like committed way more of a position to it. But once again, me being a value sort of investor, I'm not nearly as much of a dreamer as I used to be. So now I actually look for value, and ASTS is long-term hold for me. I love the business model of ASTS. So
I was just gonna see if you had any thoughts. I mean, it's almost $100 a share. If you've
it's 30 something billion, but if you look at the total market potential on this thing, it's massive, right? The question now is how are some of these other businesses going to respond? I do think there's something to be said about satellite internet becoming a more, how do I describe it? it's going to be a lot bigger than what I originally thought it was going to be. And primarily not because of ASTS specifically, but because now Elon is doing this thing with Starlink, and then Amazon is going to be launching their platform with Project what is it called? It's not quite
Leo now. Yeah.
Leo. So I think that could theoretically dent some growth in broadband services for people like Verizon, AT&T, Comcast, and all these guys, but only in the rural segments. Because from the research that I'm seeing, um, in order to have like good satellite connectivity and everything else, you need to have a decent enough line of sight, and then you also need to have like you can't be in like a dense location. So within like the cities and the suburban areas that already have connectivity via like fixed wireless access and cable and FiOS, like fiber optic, you're not going to see much in terms of like deterioration. Um, but the challenge is there's at this point internet connectivity is like saturated. Like how many more people can you connect in the US like to broadband? Like there's no one left. Like everyone I know has broadband. You know anyone that's still on dial up?
I'm on diet up now.
Yeah, same thing with DSL or whatever. So now you've kind of moved into um this environment where you're no longer like trying to grow anymore. You're just trying to snipe at each other for customers. Like that's what's happening in the wireless segment too, where Verizon is like, "Oh, T-Mobile's offering you $25 a line. We'll give it to you for 20." You know? And so you're kind of like undercutting each other because there's no more organic growth left. The population of the US is not growing more than 1% a year. So where are you going to get more customers?
Yeah. I mean, I don't know. It's an interesting conversation because the past few times I've gone home now, my mom is on Starlink and she is enjoying it. We had cable hookup back before, and it was just super unreliable. It's remote, so it would go down very frequently. But the Starlink has been really awesome. So and it was fast. I was streaming from it, and they were streaming YouTube TV from it with no issues. So I was quite surprised by it. So I think if ASTS is able to provide a comparable service, then it should be great, and hopefully the people that are invested make a pretty penny. I mean, I think the potential of it long term could be easily 150 $200 billion plus company. So the fact that it's only 35, could potentially mean that there's some juice left. But I'm curious still as well. They have the one new satellite. They have another one that just I think got landed in Florida. So I'm curious if they're able to continue to meet the revenue that they were expecting, because I believe they want to get I think like 50 to 75 million in revenue within the next few quarters. So on an annualized basis.
Yeah, someone in the chat they actually had a good thing. So someone said most of the Midwest and rural areas lack high-speed internet. That's 100% true. The thing is, 5 years ago, the idea was that you would have government kind of come in and subsidize some of that connectivity, where these internet service providers they would essentially invest in that infrastructure. But that doesn't seem to be the case anymore, where Verizon is not like, oh yeah, let's kind of spend all this money on fiber optic connections to connect a rural town, when SpaceX could just basically get you a satellite connection and pretty much you're good to go, right? So in terms of like top line growth for the traditional wireline people, it's just not there anymore. But you still have that access, where that additional pathway for companies like Amazon and SpaceX to do well. By the way, I don't think ASTS can, based on the technology that I'm seeing, they're not going for broadband. Like I just don't think that there's enough throughput where they could supplement a person utilizing, let's say, like 100 200 gigabits, gigabytes of data per month. I think it's probably going to be used on more edge cases, to be honest, in which case you're going to have like backhaul connectivity, and then also like connectivity rural, so that Verizon, AT&T, T-Mobile, all these guys, they don't necessarily have to build more towers in like the rural areas that don't necessarily need as many connections. So I think the value of ASTS is not that they're going to be capturing broadband, but more or less they're MNO partners that they're going to be able to kind of siphon off small bits of performance. What is it called? Like they're basically going to be getting rent, from all of these guys. So yeah, I don't think that like ASTS is going to launch its own standalone product. Now, the one headwind that ASTS could theoretically have is SpaceX, because Elon has spoken about making direct to cell somewhat of a priority in the future. As of right now, I don't think that Tesla is there yet, but that doesn't mean that there's going to be an indefinite, like, what is it called, like hold on SpaceX not trying to monetize the shit out of every angle that it can do.
Mhm.
So yeah, man, like this is one of those things about technology. Everyone thinks technology is a moat, bro. Technology is one of the crazy things that if you don't stay ahead of it, competitors would come in, and if there's one competitor you do not want to mess around with long term, it's goddamn Elon Musk.
There you go. Here first,
Yeah.
Mr. Steven, what are you thinking?
Not much. Reading the chat.
Anything intriguing there?
I'm a little annoyed SoFi doesn't have a custodial account after reading what they put in the chat. Very annoyed.
How do you guys feel about SoFi? I'm still trying to understand how they could theoretically get to their value. I mean, it took a pretty big hit today, but I did not expect SoFi to be at $30 a share. Just it was not in my wheelhouse. Like, I'm still valuing this thing as a bank. It is a faster growing bank, but to me, it's a bank. The business model smells like a bank. It looks like a bank. Um, their primary target, which is a bunch of Henrys, um,
What's Henry?
high earner, not something. Hold on, let me see. Hold on.
Not rich yet.
Not rich yet. That's right. So, like, as an example, SoFi, one of the things that they do is they cater to, let's say, doctors, nurses, pharmacists, and stuff like that. So they have a lot of products out there that pretty much cater to these to this class of people who, one, in terms of like predictability in income is very high. So they're able to kind of lend money to them. So like let's say you're a doctor right now, they'll give you a personal loan. But if you're just a normal person working a 9 to 5, that's job is not necessarily like 100% guaranteed, they may use that as a negative against you and not lend you that money. So in terms of like SoFi, they've had very little credit loss issues, primarily because they're very selective with their members. The problem is you're eventually going to run out of these Henrys, and then what do you do? And then you kind of have to do what every other bank and
But why would you run out of Henrys? You don't think
there's
that there's
saturation.
more people that are younger that are going to be in that same situation in 5 years from now?
No, but see, that's the challenge. Everyone is targeting Henrys right now. So you think JP Morgan is sitting around saying, yeah, we want SoFi to basically dominate the market among these people? Like, no. SoFi, not, what do you call it? JP Morgan Wealth Management reaches out to me all the time, Same
Humble
thing
brag.
with, say again?
Humble brag. I'm just kidding.
It's not a humble brag. They just email the shit out of everyone who basically is in their what is that called? Like higher earning potential people. You don't have to, like, they know because I have an account with JP Morgan. So they're always like, oh yeah, I know exactly what you have and I know what income you have and everything else. So they're always targeting you for these products. SoFi is kind of in a similar boat. But yeah, I think right now the number of Henrys over time is going to shrink. In which case now where's SoFi really going to get their growth. This year, they've been able to grow significantly because of all the rollbacks in student loan forgiveness policies. So what's happening is a lot of people are probably saying to themselves, like, wait a second, my loans are not going to be forgiven. Well, I better consolidate and refinance them with SoFi, who's giving me
but
a
that's
better
not
rate.
happening.
Huh?
That's not happening.
That's not happening?
No.
I thought that was the value proposition for SoFi this year. That's why their valuation went up. Then what's the reason why their valuation started to climb up?
SoFi's originations on student loans have not moved. They're still not where they were pre-pandemic.
So then what's the cause of this massive move up?
Hold on. I'm going to show you a chart that's going to make you go crazy. Like, I am shocked at this, and it's annoying, but these are the originations for their loan book. Student loans is the blue line. How
Okay.
crazy is that?
So then it's personal loans?
Personal loans is the dominant platform in their loan origination book.
Interesting.
So that's actually part of the value proposition for 26 is that rates are coming down, and people who are now in a position to refi, we're going to likely see student loan originations pop. And if we can get mortgages down to mid to low 5% range, the home loan originations could pop also. The big thing, the story of 25 was financial services. So we got an S curve in financial services. I don't know why. Oh, because we don't have the Q4 numbers. So financial services S curve right here for revenue. And after Q4, it could be generating more revenue than the lending platform. In a lower rate environment, SoFi's NIM, and for everybody in the chat, the net interest margin could expand because as rates come down, they'll be paying less in interest on the deposits on the books, and they could expand their margins on the lending platform. SoFi is really interesting. I mean, their contribution profit, financial services is about to overtake lending. This is going to be a really good year for SoFi. I do think I think that we all on the Friday show were really bullish last year. We are even more bullish this year. I'm at over 50 by end of year on SoFi. Got a lot of catalysts.
So what do you mean by like financial services? Like what business is that? Like what do they do?
So everything that they do with checking, ETFs, everything that a traditional bank does outside of lending. So they're growing their ETF business and mutual fund business. They have the checking platform. There's a bunch of businesses inside of it, but the real potential for this is business banking, is the loan origination book expanding, wealth management, and the tech platform actually getting some RFP wins, because then they will be generating recurring revenue from their, let's call it peers, even though I want to use a different word. Supposedly Q1, we're going to see some of these deals finalized. Now, what happens, who knows? Noto's been pretty hush-hush on it. But the reality is that their products per member keeps expanding, and their member book keeps expanding. So they're still growing members. Deposits are growing steadily. They actually jumped in Q3. So they're generating more through the net interest income than what they're paying out. And Noto keeps triple beat on revenue, beat on bottom line, beat on guidance. And this is a stupid one. This could be looked at as a Robinhood catch-up trade because of S&P 500 potential inclusion this year. So we'll see what happens.
Interesting.
Look, Robinhood went to 150. And I'm not saying that that's a good reason. I think everybody knows that I don't fall into those camps. But the reality is that people could look at SoFi as I missed out on Robinhood, I missed out on Palantir, I missed out on this. Maybe SoFi is not a bad idea to try to get into something that could run. And if SoFi gets into the S&P 500 in the first half of the year, that just means more volume every 2 weeks and more credibility. Personally, I would like SoFi to get acquired to put me out of my misery so I can just take that money and go do something else with it. That's what I would love.
Well,
I
why
would
though?
love
I feel like
something-
you're confident in it long term.
I am, but you know what? If somebody wanted to pay 45 or 50 a share next month, I wouldn't hate that either.
Yeah, but I mean, well, let me ask a stupid question. In 10 years, I mean, you think it's going to be worth over 100 a share, probably, right?
I don't know that I'm going to own it in 10 years from now.
Oh, Stefan, what are you going to do with
I
it?
don't know. 10 years is a long time. I don't know that I'm going to own it in 10 years.
Steven over here says he gets 50. He's going to put it into some dividends and chill sort of shit.
You get 50 on it that quick. I mean, I wouldn't mind at least taking my initial investment out.
Hmm.
Like, I think that's what I'm going to start doing actually at some point.
And do what?
There's some other things I want to buy, such as Nvidia. But you know,
Like NVIDIA.
So here's a question. So if everything is so positive for these guys going, why did they get that? Like, why did they get that downgrade? Like, what was the reasoning
the
behind it?
banks love to downgrade them. They deal with downgrades from the banks every quarter. We're still trying to figure out what they're using the money for that they diluted shareholders with.
Yeah,
So-
that's the other thing too. I'm looking at their share
Yeah.
count from 22. They've basically the share count is up 50%.
Yeah, so they diluted when they bought. I'm not sure what time frame you're looking at, but they diluted to buy Galileo, they diluted to buy Technesis, and they diluted 2 other times, like big dilutions. The biggest one came right after earnings in Q2. Well, the second to latest one, Q2, right after earnings, they diluted, and then they diluted last quarter. So I have no idea if they're looking to acquire somebody or what they're doing. So.
I mean, operating cash flow is not good. But financing cash flow, let me see. I mean, they have been buying back some shares here and there, but not like a significant amount.
Nothing
Not to,
significant.
yeah, not to the level. The stock-based comp is there. I don't know. I'll take a second look at it, but it's probably not. Like I said, to me, I look at this and it should technically be closer to a bank, which means like a 12 times forward earnings. But I don't know if they can maintain this 30% growth rate, which I find hard in financial services with just how much saturation there is. But
I mean, that's the big thing, that their EPS estimates, they're trading it 50 times this year's earnings.
Yeah.
And that is on the low end. The analysts have them coming in at 58 cents this year, whereas they guided for 55 to 80 cents. I think the analysts are going to be wrong. And then next year, they're trading at 36 times next year's earnings. And the analyst community is expecting 81 cents, which is at the top range of what Noto guided for this year. So there's a lot of forward growth. I mean, you got, even on the low end, 57% EPS growth this year and then 40% next year. And I think that that's seriously wrong. They also have high double-digit growth right now at 37% year over year this year. Analyst community thinks 25%. I think they're going to do over 30% next year. So it's still a high growth name that can catch a bid.
In terms of EBITDA growth or net income or
Revenue.
oh, revenue. Okay.
Yeah.
But I mean, that should mean that you see even more so, because didn't they just basically over the past 18 to 24 months, they just hit profitability. And so to me, that means that if your revenue is growing at 30% if your margins stay the same, then your net income should grow faster than that, because they're obviously now powering through the SG&A drag on the company. So potentially you could see the earnings go over $1 billion this year. It's kind of what I'm thinking, which would be close to a 60% increase.
Where are they right now?
641 based off.
Yeah, look, in 2026, they could get to over $1 billion in net income.
Yeah.
The easy money's probably made. I mean, it's hard to say the easy money's not made when SoFi was trading at $5 year and a half, 2 years ago.
No, I mean I fully agree with you, and this is the thing. People can be like, oh, they're short SoFi. It's like I don't think anybody's saying short SoFi here. I mean, I think it's just that I agree with you. I think the easy money's been made, but at the same time, I could see this growing into a $250 billion company in the long term. So
yeah, that was always the premise, that if Noto delivers on what he says he wants to do, this still has a very long runway at 37 billion market cap.
Yeah.
But once again, I'm still surprised Wells Fargo hasn't acquired them yet.
Wells Fargo needs to do something.
Shit, even PayPal, bro. PayPal's got, well, now it'd probably not be a good time to buy it, but at one point, PayPal could have. I've always said PayPal really needs another growth engine. They've really put themselves in a really bad place. But then again, I'm not sure if PayPal could theoretically acquire them. There might be.
I don't even know what PayPal can do to get on the right side of things at this point. You talk about a company that, by the numbers, is so undervalued. The market just hates them.
I think the problem is their growth, man. They're barely growing at all. If you look at their revenue growth numbers, at one point they're growing 20% year over year. Now the growth rate is down to 4% on an annualized basis. On a TTM basis, around 4%. So, if you're only doing 4% year over year growth, even if you're generating a significant amount of cash flow that you're using to buy back shares, the value proposition of getting a higher multiple than a traditional bank is not going to be very high. I mean, at least with SoFi, you've got 30% year-over-year growth. That's a big deal,
Yeah, look, PayPal can buy back. PayPal, I've said for the past year, should just take the company private. That would be the best thing that they could do at this point, because at this rate, they're going to buy back every share in the next 11 years.
Which is fine for investors and shareholders. I mean, dude, even a melting ice cube is worth something.
Especially when my Coca-Cola is warm.
Yeah. I don't know. I see PayPal could have some reacceleration because they're just comping against some really, really low numbers going forward. So theoretically, if they are able to kind of launch some new products, I mean, this is where you got to kind of listen to Roy. Roy was saying about like PayPal is going to do like ads and stuff like that. So I'm like, interesting.
Yeah, how much is that going to help them though?
I mean,
I just don't know how big that platform can really get. And I haven't looked into it, so I really don't know.
Yeah, you'd have to really do some research on it. But in my opinion, they probably should have acquired a company that was more fast growing that they could have used to supplement their growth rate. I mean, that's what Salesforce did for the longest time. That's what Adobe did for the longest time. The difference is I don't think Salesforce can do it anymore because of antitrust issues, right? Question is, if if PayPal were out there, who do you think that they could acquire that would actually make sense in terms of reaccelerating their growth? Similar to how SoFi picked up Technesis and all the other little companies that they picked up.
Matt, why don't you go first?
With respect to what?
What companies do you think PayPal could potentially acquire to jumpstart growth?
I think they should acquire Toast.
I was going to say Shift4.
Toast, the problem is Toast is already like 21 billion. So not exactly a cheap value proposition. And then you got to drop in probably a sweetener. So
I'm not sure. I want to be bullish on the company because I know Roy's a big fan of PayPal. So I want to see my friends win. They need to do something. I don't know what it is.
I don't know what it is either. I would have liked to see them come out with a 4% dividend. I think they missed the boat on that.
But they're doing so much in buybacks, man. Like you combine the yield, it's actually
Buybacks
really
haven't
good.
done anything. I mean, at this point, it's such a dead company. The market doesn't care. That's the
Dude,
problem.
buybacks are not gonna. I think this is the problem with so many people. Like, dude, just because the company is buying back shares doesn't mean that it's gonna instantly translate into value for shareholders, especially if the PE when they were buying back these shares was like 20. You know, it's right now the PE's dropped down
I
to
mean,
10. The yield on this thing is crazy.
Yeah,
Like,
the yield on the buybacks is crazy, but it hasn't been doing anything. They've been buying shares back since 2014. I mean, they bought them on the way up, they bought them the entire way down, doubled down on the way down. 2021, they bought back 4.4 billion, then 4.5 billion, then 5.2 billion, then in 2024, 6.4 billion, and in the trailing 12, 6.2 billion. Market doesn't care.
yeah, but look at that earnings now. Look at that EPS number, man.
Right, but that's the only reason the EPS is going up because of the buybacks.
Well,
That's
which
why
is
the market
fine.
doesn't
That's
care.
exactly what you could say about AutoZone too.
No. There's a difference. There's a difference, Chris.
What's the difference?
AutoZone actually grows their top line, and their bottom line
Well, what did they grow
versus.
their top line by?
I mean, if you look at AutoZone, this is the difference between AutoZone and PayPal, Chris.
Mhm.
You know, they bought back 90% of the shares outstanding, yes, but they've also 6x'd their entire profit for overall profit. So yes, the stock is up like 6,000%, but that's not just buybacks. Versus when PayPal, you're not actually growing the bottom line. In fact, margins are actually getting worse. So you're just buying back stock, and that's great. You're increasing EPS. It's the same problem that I have with Apple. Yes, the EPS is growing, but is the actual earnings of the company growing? And the answer is no.
Take rate is compressing on PayPal.
Is it?
Yes, which is a big problem.
Mm.
And with AutoZone, the growth on the revenue is mid to high single digits, whereas PayPal's is low single digits. Much different.
I mean,
And the income is growing on AutoZone. versus
is it
PayPal.
net income? No, it's not. Net income's actually trending down.
For AutoZone?
Yeah. Here, check it out.
I mean, are we talking about over the past 10 years? Or are we talking
Past 10 years, it's doubled.
Yeah. 1 second.
versus PayPal is what?
So this is AutoZone right here. Share the screen real quick. So AutoZone's net income, it peaked out in August of 2024 and has been coming down.
I'm talking over the past 10 years. I mean, I don't necessarily know like the quarterly earnings.
Right, but that's what I'm saying. Like the crazy buybacks for PayPal only started not too long ago, where that actually made sense to buy back the shares because you're not just destroying value by buying back overvalued shares. So like if you look here, where is it? Net income. PayPal's net income growth has leads 11%, like for the last few quarters, right? So, and net income is almost $5 billion. So, see, the net income is actually growing. Not EPS, but net income is actually growing for PayPal.
Heard it here first.
Yeah.
Chris, go to the buybacks. They didn't just start spending a lot on buybacks.
No. But the value accretion portion of the share buybacks is actually now more pronounced than ever before. The reason why is because if you buy back your own shares and you're trading at a 60 PE.
Chris, it was the same in 2022, 23, and 24. PayPal's
right, but listen to me. Hold on, Steven. When you're buying back shares at a 60, 70 PE, you're not doing anything to create value for your earnings, right? Versus buying it back at 10 PE, right? The earnings yield that you're going to get when you're buying back shares when your stock is overvalued, right here is right here. Look at your buyback yield. Your buyback yield when they were buying back in 2021 was nothing. You know why? Because you're basically buying back a whole bunch of expensive shares. Now you're buying back shares, and now your yield on that buyback is almost 6.5%, 7%. Does that make sense?
The yield on the shares doesn't matter. It's the amount of shares you're able to buy for that chunk. They've been
No,
able
no,
to buy roughly the same chunk of shares
no,
and
Steve,
increase the EPS over time to increase the yield because they've been able to buy back such amount of shares.
no,
They
Steve.
did.
If you're buying back shares at $200 a share and your earnings is only like, let's say $10, you're not exactly like bringing value towards those share buybacks. You don't buy back your shares when things are super expensive. The amount of shares that you buy back, the amount of shares that you're buying back don't go down materially. Like if you look at the amount of shares that they've had
Chris,
in
think about what you just said.
yeah,
Think about what you just said. Of course they do. If your stock is at 70 and you
Mhm.
buy back $5 billion and your stock is at 72 or 68, buy back $5 billion worth of shares. It's roughly the same amount of shares you're buying back. The
No,
earnings
it's
yield doesn't
not.
matter
No,
on that.
but Steve, no, it's not. Look, they like let's say
It's a
you
simple math equation. It's 5 billion divided by the number. That's how many shares you're buying back.
right, but that's what I'm trying to say. That when you're doing 5 billion shares buy like $5 billion worth of share buybacks when your stock is trading at 200 versus when you're buying back at 50, you're buying 4 times as many shares as you were buying
Right,
when
but
the
Chris,
stock,
that's what I said. From
right,
2021, 22, 23, 24, and 25, all they did was buy back a ton of shares. The market didn't care. Stop.
right.
PayPal
But
was
that's
not 300 those years.
right, but that's the whole point that I'm trying to say, that look at the amount of shares that went down. Like when they were buying back shares during that period, all they were doing is running out dilution from share issuances. Because remember, they were still issuing shares to their to their executives and stuff. So in terms of like dilution, they weren't really doing anything but just keeping dilution like the share count even. Now look at that share count; it's dropping by 6.5, almost 7% per year. Do you see
Stock-based
that?
compensation was
Yeah.
roughly the same from 2020 through 2024.
Say that again?
Stock-based compensation was basically the same from
Right, but that's
2020 through 2024.
but you're looking at it from a cash perspective. Yes, I get it. Cash-wise, the executive comp is the same. The difference right now is that the total number of shares is going down significantly, right? Because the value of those shares is much, much lower. Like imagine right now if PayPal was $20, how much more could what is that thing called? A $5 billion
Yeah,
share buyback.
you would buy 3x more shares.
Exactly. So that's what I'm trying to say, that now the number of shares is going down even faster. That's why their EPS growth is actually accelerating to the upside. You see, their
Are you
EPS
buying, Mr. Patel?
as of right now, no. You know, I'm waiting on to see if this ad platform does anything, because until this starts to kind of level off, where you're going to see like a sustained 5, maybe even 7 to 10% growth rate, the market is always going to punish this thing. I mean, it's trading like a value company right now. So it's basically graduated from a growth company to a value company, right? So if you have this crazy amount of growth in EPS, about let's say 20% year over year, and you've got a PE of 10, that means that you've got a pretty decent return going forward, right? So if you just forecast this out going into, let's say, 2029, you're basically buying a company that's at a 6.48 PE based on 2029's earnings. So theoretically, if this thing trades at, let's say, a 10, maybe a 12 forward multiple, right? That means that this thing could theoretically double from here. Does that make sense? Kind of, sort of.
No. Double from here? No.
Yeah, I mean, by 2029, you don't think this thing could double from here, considering all the share buybacks that they're
I
doing?
think it's that hated that it won't. Look, it should be 90 to 100 now. The company does not deserve to be where it is. The
I
problem
think
is
I think it
that they
deserves to be where it is, to be honest with you.
look from a free cash flow perspective, from an earnings perspective, it does not deserve to trade like a tobacco company. Now, the reality is the market hates it, and they continue to do 4 to 6 billion in buybacks every year, and it's doing nothing for shareholder value. It's the only thing that is keeping EPS accelerating because they cannot come up with new products. And I think ads is going to be a very bad business for them because who in their right mind is going to advertise on PayPal instead of on Instagram and Facebook from Meta or through YouTube and search from Alphabet? It's just that it's not a winning situation for them. Even a company would likely go to Amazon for ads. Like PayPal needs to make an acquisition. They need to stop messing around with this advertising platform because if you bring up a 5-year chart of the stock, they have been buying back shares and this has done nothing. This is a company that is flatlined. And there's a lot of value to be unlocked. It's just Alex Chris is not the right CEO to unlock the value.
I don't know, man. I just
look at a 5-year chart.
I
Did all of these buybacks and it has not moved the stock at all. It's the only thing that's keeping the stock from not taking another leg down because it's actually manufacturing earnings. That's the only reason that they're doing all these buybacks.
I mean, like I said, you could say the same thing about AutoZone too, man.
But AutoZone has more revenue growth.
AutoZone has got 3% revenue growth, man. Like, look, you show me AutoZone's where it's been able to grow its earning. I mean, its top line by that much. Like in 2016, they were growing by 6.4%. They slowed down to 3.7%. They had a huge uptake during COVID, those few years where their revenue growth accelerated, but then it slowed all the way back down to the mid-single digits again.
Yeah,
so
Chris,
AutoZone is growing at mid-single digits.
Expectations. They
Say that
have
again?
high single-digit forward revenue growth. PayPal is low single digits. That is why the market is more inclined to go with AutoZone over PayPal.
Are we looking at Steve? Are we looking at the same thing?
No, we're not. I just told you what I'm looking at. I'm not looking at backwards numbers.
But that's what I'm trying to say. What do you think AutoZone is going to be growing at forward?
I just for the third time, the analyst community has them in high single digits.
So right here around 7%.
That would be high single digits.
Okay.
And you go to PayPal, they're in low single digits.
Yeah, but the PE on this thing is almost 21 versus PayPal is 10.
I'm just telling you, the market hates PayPal. The
don't
market
know.
actually hates PayPal. The take rate is compressing.
Yeah.
The market hates them. Buybacks are not doing anything for them. It is the only thing that is saving the company because it is allowing them to grow their EPS. Without the buybacks, this would be an EPS story in decline. They don't have a choice other than to do the buybacks. PayPal needs to make an acquisition if they want to potentially go higher because no matter what they do, the market does not care.
Just to let you know, AutoZone's buyback yield right now is only 2.3%, right? PayPal has a 6% buyback yield. Just saying. I don't even know why I'm trying to justify PayPal. I don't really care about PayPal. Get Roy on here.
I was gonna say, can we talk about stocks that we actually want to buy?
Yeah, exactly. I don't
Can you guys tell me if I'm cooked? What do we think about Rocket Lab at $85?
You don't want me to answer that.
You are so
Wow.
cooked, bro. You are.
I want you to answer it, Steve. I want you to answer it, Chris.
No.
So why is ASTS not cooked, but I'm cooked?
Because the business model of ASTS makes sense. I'm kidding, man. You were right about Rocket Lab. I was wrong. I'm not too proud to admit when you're right. You were right because the launch cadence for Rocket Lab seems to be going higher and higher. They definitely have other businesses that are out there. The expectations that these guys are going to be able to get Neutron off the ground is there. Do I like the fact that they're still burning a whole bunch of cash? Probably not. But in terms of like them being just a launch services provider, I don't think that's the whole thesis behind Rocket Lab. I do think that they're going to have a period of weakness though, here and there, but that's long-term. If you're a long-term shareholder, you'll be fine.
Yeah, I'm curious to see after the Neutron piece where they're actually able to focus on the constellation. What are they actually going to go after? And because they've stated specifically that it's not going to be consumer-based internet. So
it's a moonshot, moonshot.
And then Steve still thinks they sell mortgages. So
they don't.
The Rocket Mortgage.
No, but I mean, look, and everybody in the chat, what I'm about to say is only pertains to Matt. Does not pertain to anybody in the chat. I'm just saying you were right. You have made a 20x on this. Maybe you start thinking about some other things. That's all. I mean, you were buying this at 4 or 5.
Not wrong, Steve.
I'm just saying, like, at some point, you want to protect. That's all.
Not wrong, Steve.
To be honest, Steve, I've been telling him to protect his downside since that thing was like $20. I was like, bro, you got your 5x, sell some of it, so relax. And he's like, nah, fuck that. I'm buying more.
I mean, look, I don't understand the company. I don't know what it's going to do, but when you get a 15 or a 20x, I mean, maybe you want to protect a
Oh
little
man,
bit.
Matt
don't know.
is in it. Matt is in it long term, dude.
No,
Like,
look,
trust me,
I get that. But here's the problem. What if we go into, and we saw it in November, but what if we go into a drawdown? Rocket Lab's going to be one of those companies that gets chopped in half, if not worse.
Matt doesn't care. He's looking forward to it so he can buy more, bro. You cannot get Matt
Then,
off of the Rocket Lab train right now, dude.
then you hold it and maybe you buy some long-term put as insurance.
Just remember, Matt is 30 years old, Steve. Okay, he's got another 50
That's
years.
30 years old.
34.
Wait, what?
I'm 34.
I thought you just said you were 31.
No, 34.
I
Tevis
thought
is
you were
31.
like 36 or 37 for some
Yeah,
reason.
he's a young guy, man. He doesn't care. He doesn't need the money right now.
No, but it's not about that. It's about you get up 50, it's just like John Goodman in The Freaking Gambler. You know what I mean? Like at some point, you protect your gains.
Yeah, but he doesn't need the money like that, Steve. Relax, man. If this is like saying, "Oh, you know what? I made my 20x on Microsoft in 1997."
So Steve, this is the way I explained it to Tevis, and whether or not it's right or wrong, right?
Yep.
But and I'm curious to hear your guys' thought because I'm cooked either way, right? I'm dumb. I don't know what I'm doing. I'm playing Monopoly, right? So the way I look at this is like, say it goes down 50%. Am I going to be living under a bridge, or you know what I mean? Like,
Steven,
or
just
the way I
remember.
look at it is like, okay, so if this actually does become the next SpaceX and actually becomes a couple $100 billion company, like I feel like that is more likely, and I would much rather get to a place where this is the thing that I hang my hat on and take it to the fucking end zone than be like, I sold it because I want to protect the 50% downside. Like I see this potentially being my 8-figure potential payday. And if that's the case, it's like, well, do I really care if it drops 50%? And because I look at it this way, Steve, I'm like, okay, they're at a place now where they've established themselves enough where the valuation of the company is worth $25 billion. Right? Even if everything else fails, they just become because just based off the moat alone of them being able to launch things into space, being able to have the sort of infrastructure that they built out, coupled with their execution ability, like if you handed somebody $25 billion, they probably wouldn't be able to give you what Rocket Lab is able to do right now. So if you think about it just from that perspective on a moat basis, the company should be worth $50 a share. And so if you think about what they're actually going to be able to establish going forward, you're sitting there like, oh shit. Like look at how many other companies have tried to get with billionaires behind it, right? We're talking about people like Chamath and Mark Cuban and many others trying to accomplish what Rocket Lab has done, and they've gone to zero. And so you're telling me that even if you handed somebody $10 billion, would they actually be able to build what Rocket Lab has done? And the answer is probably no. So there is a floor to this, of course. Now, every company can go bankrupt, but I'm just saying, like, if you think about it in that perspective of like, holy shit, these guys are the second most launched vehicle, not just in the US, but in the world. And they're coming out with new products. Like to me, it's worth hanging your hat on. And SpaceX is demonstrating that there's a market for this shit. And I don't know. To me, it's just like I would much rather see where the potential goes. And if it means I end up losing 50%, that's still way more money than any other investment that I've ever made off of a 50% drop. So to me, I'm willing to risk that. I'm 34. I would hate to go the other direction to say I sold and it kept going So to me, it's worth investing 50% of what I have right now to see if, because that's basically what everyone else is saying, right? Everyone's like, it could get chopped in half tomorrow. And I agree with that statement. It could. And if it does go back to 38, $40 like it did in November, I'd probably buy more. But the way I'm looking at it is like, am I okay losing that payday for the likelihood that it could go up another couple seven figures?
Listen, Matt, Steve is down the most in our stock draft. I'm down second to most.
Yeah, we
You should
don't
not
know
be
what we're
listening
doing.
to either of us.
You know what you're doing.
You know what you're doing. We're clearly the freaking odd man out. So whatever we say has no standing in your decisions. All right.
Yeah.
I mean, look, this is where the stock draft was a very, very revealing tell of the investing style that all of us have. And one of the correlations that I noticed was that a lot of it was based on age, right? So you can see that the younger people were more in tune with, hey, you know what? I'm going to take my chances on moonshots, right? I don't necessarily need to look at earnings. Like you look at like a majority of your return has come from ASTS and Rocket Lab, both of which are theoretically moonshots. There's no valuation fundamentals behind these names, but you're killing it right now because you were like, you know what? I believe in the story. I don't need to believe in the fundamentals. I think these guys are revolutionary, have revolutionary products, and that's why you're doing spectacular. And I'm sitting here like, oh yeah, I think the next big thing is what is it called? Like what do I have? Let's say I have a United Health Group. Oh, I think insurance is good. So my theoretical limit is, you think United Healthcare is going to 5x on you? Probably not. Versus you who read, clearly Rocket Lab has the potential to 5x. So, and that's what it is. When you become older, I feel like you lose your imagination and your tolerance for imagination. Have you
I
felt
find
that
the
way?
opposite for me.
Really?
I feel, yeah. The less, how do I maybe I'm curious to get your guys' thoughts. Maybe it's because I've hit this limit of like, I can think without the fear of being poor, I guess.
Have you ever lost 70% of your portfolio?
I've lost over seven figures in drawdowns.
No, 70% of your
paper.
portfolio. Have you lost 70% of it?
No.
Steven, have you ever lost 70% of your portfolio?
No.
What's the biggest drawdown you ever had, Steve?
50% maybe, 40%.
Have you got to those numbers, Matt?
Portfolio? On individual positions or the whole position?
Whole position.
I think the worst was probably 2022 when I was down like 30, 35%, something like that.
Okay, so I have been in the 70% camp. I was younger, I was dumb. And because I was young and I was dumb and I had to learn my lesson the hard way, it keeps me from being as imaginative as some of you guys have. Now, that is just because I've personally had the scarring of that kind of like situation. And so that fear is always in the back of my neck. I hope to God's Matt, you never have that feeling ever, where you do lose a good chunk of your net worth. But let me tell you something. The minute that you do lose something like that, there's always this specter that comes and reminds you, hey, remember me? And you don't want that guy to ever be in your life ever again. So that's why when you say, yeah, let's buy Rocket Lab, I'm like, nah, bro, I'm not dealing with that kind of a drawdown ever again.
I also think it's more as you get older, you're less willing to take risks because a lot of times you don't need to. If that makes any sense. You know what I mean? I don't know if that's a good way to explain it, but if you're in a position where you are able to provide and you're able to do okay and you don't have to go for a moonshot, it's harder to allocate a large chunk of money to something that could draw down 50% or go up 100% than something that may only go down 10% and could go up. It's just more at some point a switch gets flipped. And I don't know when the switch got flipped for me, but the switch gets flipped to capital preservation mode at some point.
Yeah, 100%. Like see, the thing is, like, the other thing is I've seen my dad lose a lot of money too. So, I saw my dad lose a lot of money. I lost a lot of money at one point. So because of that, I'm a lot more risk averse now. So when I look at my portfolio now, I'm like, okay, you know what? I don't need the Rocket Labs of the world. I need the Disneys of the world, because I have made enough money in this market where I've compounded enough to the point where I don't need the home runs anymore. I don't need the grand slams. I'm okay with making a whole bunch of singles. And at my age, and I'm not that much older than you, Matt, but once again, you are at that stage because we both talk all the time, and we know what our net worths are at this point. You're at a point right now where you've made it, and you've made it big. So, toning down the risk right now while you're up significantly may not be the worst decision. The only thing I would tell you is the same thing I tried telling Vitaly and Carlos, which was, just because you believe in your idea and that you can do no wrong doesn't mean you should not buy some protection to the downside. Because if there is a point where something comes along that's completely out of your control, you don't want to be in a position where you're uncovered. It's like driving a Ferrari in the middle of Midtown Manhattan without insurance. You don't do that, no matter how good of a driver you are. Even if you're Charles Leclerc or Max Verstappen and you're like best driver on the planet, if someone rear ends you, sorry, that's just a part of the game, and you can't be crying. So my advice to you would be, yes, if you believe in Rocket Lab like there's no tomorrow, I think you think that this thing is gonna 10x from here, that's fine. But don't be like, yeah, I already made 5,000% on my position. I don't want to risk buying a couple of protective puts just in case some shit happens.
Mm-hmm. Yeah, I mean, when the stock was a little lower and I was selling covered calls, I was buying more of the stock. But now every time I sell covered calls, which you got to think at this point, sometimes that's a large portion of the initial cost basis of the entire position. I put it into other things. Most of the time now, actually, it's more dividend-focused stocks that are kind of like pushed off into a separate account. But that's initially what I was doing when the stock was way cheaper. I was just buying more Rocket Lab. But now, the cost basis of the company has probably been removed. I've actually probably gotten back how much I've put into it and put it into other stocks like Amazon and the Googles of the world, and maybe even other dividend companies. But not other dividend companies, but dividend companies. But I plan to do that as well. Like, I'm probably going to stop selling covered calls here in the next month or two, just waiting until the Neutron thing goes through, which I think will be within the next 6 months. And when it does, and you get a little bit more clarity on the future potential of the company, I might start selling covered calls again. But I don't know.
Yeah, I'm just saying.
You guys aren't wrong. I think that you guys are right. But the way I look at it is like, I went through the scenarios in my head and I said, I would much rather lose 50% than.
That's all that matters, though. I mean, look, the
yeah.
answer. It's what makes you sleep well at night. That's the biggest thing.
Here's
Doesn't matter what Chris or I would do.
Here's a question to you. If you could protect your entire position right now for 10% of your position for the next 2 years, you get all the upside in the world. But if, let's say, it doesn't go anywhere and you end up losing 10%, would you be okay with that?
Yeah, if I knew how to do that without hemorrhaging cash, then I would do it probably.
Yeah. So the thing is, like you said, one of the ways that you could theoretically do that is by selling far out of the money covered calls like you've been doing, but instead of recycling the money into buying shares or whatever, buy some puts, buy some leap puts.
Buy puts on it. Yeah.
So this way what happens is you don't have to do it the entire position right away, but what you're doing is, and you've been doing this already, you sell a really far out of the money call, you take the premium, and then you buy a real far out of the money put,
do the Mark Cuban method, right? Like, as long as it doesn't go to zero, you're still, well, what is it? I guess like you're using whatever cover call income to be your costless collar. He did it costless, but I'd probably try to still make a little bit of income. But either way, it would still like you stated, like if I honestly truly believe that it can only go down to $20 billion market cap, long term, as the actual downside. Um, and it's not to say that it couldn't go down to like a $5 or $10 billion market cap. It easily could get chopped in like 80%, 70% from here. But I think in the long term, people will recognize that, oh shit, we need this. ULA is literally burning to the ground, which is a Boeing Lockheed a joint venture. Tori Bruno just went to Amazon, or sorry, not Amazon, Blue Origin. So, but yeah, I mean, I have other things as well. Like I have my SPY position, I have my Amazon, I have my Google.
Yeah. The only reason why I say that is because it has become a large portion of your position, not because you've been buying more and more, but because it's just outperformed your portfolio so significantly, and now it's become such a large chunk of your net worth. So here's the thing, like if it was only like 5% of your position, like portfolio, like who gives a shit what it's valued at? Like, like I have a position right now in certain things that like it's barely 5% of my portfolio. You think I'm like, oh yeah, let me hedge my 5% position? No, fuck that. I don't really care. But if you're telling me like, holy shit, half my portfolio is in this one stock, hey, I better be careful with that. I better make sure that I'm hedging at least somewhat of that downside risk, right?
Yeah,
So
somebody said in the chat that I need a Rocket Lab hat.
you do have a Rocket Lab hat. It's a Neutron.
You're
hat.
wearing it.
Exactly. No, 100%. Yeah, I think it'll be interesting. Where it goes. You guys will be the judge. Like, I think if it was different, if it was like a small modular reactor company or something like that that hasn't actually installed anything, then I think we'd be in a different situation. But,
dude, just say Oklo, all right? You don't have to sugarcoat it. Oklo, baby. There's plenty of people right now sitting on a ton of Oklo gains.
Yeah. It'll be fun. You guys will witness it. You'll either, be like, "Told you so," and I'm glad. I'm glad that you guys are.
I don't like
my voice.
Told you so to friends. I'm not.
No. You guys are my board of directors. Like if you look at me as a company, you guys are my board of directors. You guys are, people that I love and cherish and value your opinions, and you have that outsider perspective. I'd be more than happy if. I've asked Tevis, I've asked you guys. It's like if it actually ends up being down 50%, it's like, hey, I would love for you guys to be like, hey, we talked about it. You fed it in, and not to say I told you so, but you're like, we walked through it together, and
you want
the
my
decision
honest
you made.
opinion, Matt? You want my honest opinion? Sell all of it, take the money, get a whole bunch of cash together, go to Thailand and bang a bunch of hookers and do some blow.
That's some horrible advice.
Nah, it's great advice, man. How many times are you going to be able to do that? I can't do that anymore. I'm in my 40s, man. I'm done. You still got that last ounce of freedom before you get the ball and chain attached to your leg.
I swear to God, if I could have bleeped all that out, I would have.
Nah, bro. You get unfiltered, Chris. Sorry. Just go out there, dude. Just go out there, get you a nice, and you don't even have to just get one, bro. You've made enough money where you can get you could get like 3 of them. I don't know, more than 3 is just too much, but 3 at the same time, What is that called? A quadrusum? Is that what it's called? What's the term?
Steve, what are we getting for dinner, guy?
Wait,
what are you getting for dinner?
I have no idea.
Wait a second. A threesome is 3 people, so foursome would be 4. Okay, yeah, it's a foursome, not a quadrusum. Sorry, I'm using the wrong words here. But yes, that's the goal, man.
What are you getting? Are you getting Thai food for Chris for dinner, Chris?
I mean,
no.
Chris is basically saying, look, you're getting Thai food for Christmas. But I mean, or Matt, you could, just keep doing what you're doing, and hopefully it works out the way that.
Matt, have you ever had a venereal disease?
Oh my God.
No, never had to get a shot in your penis. No,
I'm a church-going man, Chris. I don't even know what you're talking about.
I'm like the devil on his shoulders right now. Yes. Go to Thailand, get you a lady boy.
Jesus.
I'm a church-going man. I have no idea what's a lady boy. I don't even know.
Yeah, exactly.
I wouldn't know.
I mean, on that note,
Listen, guys, I talk a big game, but I don't have the balls to go to Thailand and do some dumb shit like that.
yeah, you're
No,
trying to
you
send
got-
Matt there.
I'm trying to send Matt. I'm trying to live vicariously through Matt. I'm trying to make
You're
him
trying
do all
to
the
send
bad
Matt
decisions.
out there.
I'm trying to make Matt.
I will
Yeah.
gladly go to the beaches in Venezuela.
I'm trying to get Matt to make all the bad decisions I was too chicken shit to not to make.
I appreciate you looking out for me as a strong church going a man.
Look,
Well-
man, when you turn 70 years old, what are you going to do? You're going to talk about, oh, yeah, that one time I bought that stock and it did really well. Yay. No, bro, you could tell a great story. It'd be like, I went to Thailand. I got a disease from a hooker. I got a couple of pills. It resolved it and shit. That's a story at a bar that I want to hear from someone, not, oh my God, I bought this one rocket company and you know what? I'm great now.
Bullshit. You will be asking if you were at a bar and somebody said that they made X amount of money on a stock, you're the first or second person that is going to ask them 5 different questions.
Nope. I don't care. I'll be by that time. I'll have made my own money, so I don't really care.
God.
The only thing you have at the end of the day is the crazy stories that you've had. I mean, dude, I've got crazy stories in my past. You know,
Yeah,
nothing
you're
as
also in the
crazy as
military.
hookers, but huh?
You're also in the military and went overseas. Of course, you have stories.
Yeah, but that's the thing. When you're young, you're supposed to make all your stories, man. So you look back and you don't feel like you wasted your life. I mean,
Well,
here's the thing. What's your biggest non-financial accomplishment that each of you have had?
Lived in a foreign country. That's pretty cool.
You think that's more interesting than I bought a stock that 5x'd? Hell yeah. I'd rather hear about stories of Guyana, how you were going out every day and talking to these crazy Guyanese B words, you know. My wife is around. I can't curse anymore.
I do love brown women. Brown women are very beautiful.
I love you, honey.
What? Beep's about to come
Don't
in.
give me that look. I gotta go, guys.
later, Chris.
I'm surprised it took her that long.
She's got work, bro. She's working from home.
Yo, I don't even know what to say.
I don't even know what to say.
Chris, you're
Nah,
a
go
wild
ahead.
man.
What's the most interesting story you got?
Steve? Steve's got some wild stories. He just doesn't want to say them out loud.
I went on a farm and I picked out some milk. That's great, Steve. Go ahead. Tell us that story again.
Never been on a farm.
You've never been on a farm?
Like, not like a real farm.
You want to go?
Not really.
I mean, there's like a petting zoo by me. If you want to come over, man, we could just go and you could see what a goat looks like. You know,
I mean, I've gone to Briarmere Farms or Young's Farms to get pie, but you know.
none of y'all have any interesting stories.
I want to hear Beep's interesting stories.
Let's just say that mine. would
No,
not-
Beep's even more degenerate than me, bro. You can't hear her stories. All I know is she was in Athens, Georgia. Yeah, all right, fine. I won't tell your stupid stories about how you used to get high and
What?
yeah, that's right. Tell me your cop story about
What?
you and Natasha getting high.
What?
Oh, you're not supposed to use names. Got it. Okay,
You so annoying.
whatever. My wife was getting high in Athens, Georgia.
Oh my God.
She was
That
a high
one time.
She was a high bulldog smoking that grass. All right.
Have you taken something?
No, I
Are you
haven't.
okay?
I'm just very open.
Take his mic away from him.
Yeah, you know, he overshares. That's the problem.
Take his mic away.
Take these broken wings
When I
and learn to fly again.
I used to try to silence him, but tell him not to say things. But then I just realized
Freedom of
does
speech.
Double down.
Freedom of speech.
No, I just let him be his weird self.
That's right. That's how I got her. My weird self.
It's true. Beep. You got yourself into this situation.
Come on, both of y'all. Give me
What?
an interesting story, man. I want to hear. Right, guys, in the chat. Come on.
I got an interesting portfolio for you. I'm looking at one of my portfolios.
Jeez, man. No one wants to hear
Apple,
that shit.
Amazon, BM&R,
I don't care, bro. I
Salesforce,
don't care how Tom Lee ripped you
Alphabet,
off,
Meta,
bro.
Microsoft, Nebius,
That's
NVIDIA,
how they
Palantir,
ripped you off.
SoFi,
Like
Venture
this
Global.
one Asian dude that came around telling me that I was gonna make all this money and shit. I didn't make all this money, and this damn Asian dude sounds
Guys,
all
I
smart.
think he's delirious because he hasn't slept.
I haven't
He's
slept.
sleeping about 2 hours a day right now, so I think that's his problem.
What? Wait, why are you only sleeping 2 hours a day?
Because he gets all hyped up with the market, then he can't sleep till around 12 or 1. Then he listens to streams and he researches.
I gotta support my boys.
Then he falls asleep for 2 hours, and then you make a single peep, and he wakes up, and then he's up all evening. This is
You need to sleep more.
yeah.
I do need to sleep more. That's
2
why
hours
yesterday.
is not enough.
That's why yesterday, dude, I was dealing with that whole thing. That's why I couldn't do stream with you.
2 hours is not enough. You gotta freaking sleep 5-6 hours a night.
Yeah. He's delirious.
Yeah. So
Go to
neither of
sleep,
you,
beep, beep.
neither of you have an interesting story, or is it that bad that you can't say it?
Just say what your favorite.
So my portfolio is looking pretty interesting right now.
Okay. If I had to guess, I'd say Steven was doing
Wait, hold
coke.
on. Steven, if
Jesus.
if your portfolio 15x, where's the first place you would go in the world? First place.
I live in the best place, even though I hate New York. I live in the best place.
He
So
doesn't have a passport. He's a legal immigrant.
Oh, he doesn't.
I don't need to go anywhere.
Yeah, Steven is a legal immigrant. He doesn't have a passport. He can't even get out of the tri-state area without someone from ICE arresting him.
Yeah.
Everyone
Stop.
thinks Steven is in New York because Steven loves the city. It's probably because it's a sanctuary city. That's probably why.
That's
Steven can't-
interesting.
We're thinking, hey, Steve, come out, hang out with us in Georgia. He can't, because if he leaves, ICE is gonna get him.
You know, I didn't even get the enhanced license.
I'm telling you, Steve is
No, they make you pay at the airport now. They make
Steve
you
is
pay an extra
illegal.
fee.
Steve is an illegal. Steve, I'm pretty sure they don't check on Greyhounds if you want to use a Greyhound next time. What? That's what all the illegals do, all right? They don't fly.
Stop. What is wrong?
God. You need sleep.
I do need to sleep. All right, guys, I'll see you later. Have a good night.
Good seeing you, brother.
Later.
Bye. Get yourself a passport, Steve. What's wrong with you, man? Get your
Yeah,
papers.
Steve, you know what I just ordered?
What'd you just order, Matt?
Good old 16-ounce ribeye
Did you
Solid.
really?
to celebrate with a little Caesar salad.
I like it. I like it.
I was going to go out and celebrate, but instead I might as well just get it brought to me. And
Have it brought to you. Watch some Power or something.
I need to finish Billions, Steve. I need your expert opinion if we're going to transition this towards a bottom of the night stream. Do I finish Stranger Things or do I finish Billions first?
Screw Stranger Things, Billions.
96-ounce steak. Jesus. No, 16. Can't afford 96. I ain't got that. Yeah, Chris went off. That was hysterical.
I guess we're gonna do the market fucking futures also.
You heard it here first, Steve. I like it.
Let's see.
It's only
where-
7.
It's fucking 8 o'clock already. I gotta get dinner. Futures not looking great. Nvidia up 0.5%. Palantir even. The Qs even. SoFi pretty much even. Zeta up 0.5%. TSM even. Hood even. Not much action. BMNR up almost 2% after on the night. Nice.
His name's Steven. Concrete jungle where Steve is made of.
It is a concrete jungle out there.
There's nothing Steve can't do.
So, Maddie,
Yeah, man.
call it a night.
I think you need to get something to eat.
By the way, my wife is saying that you have the best songs.
What, for singing?
Yes.
What does she want? I take requests.
I don't know. I'm sure she can hear you because she's listening. So if she texts me, I will let you know.
Question, because how do you and Amit do this? Like, do you don't wear like people were making fun of me yesterday because I wear headphones,
Right.
but which is fine. I'm okay with people making fun of me because I wear headphones, but and same thing with the White House. The White House did as well. But I'm a bearded man or whatever the hell they said. The how do you participate in StreamYard without having echo?
Without the reverb,
Yeah.
the computer does it automatically.
Am I just cooked?
Yeah, you don't need headphones, dude.
Then how do you listen to?
Because one is I think the computer recognizes that the microphone is in the in jack and the speaker I have hooked up is coming out of the out. So I feel like it automatically takes that out of it.
If I try this, it'll just completely blow up the stream.
No, it'll work. I'm telling you, it'll work. She said something from Brian Adams.
I don't know a lot of Brian Adams. I'll learn. How about that, boss lady?
You'll learn.
She needs to find me a baddie in New York. That's what she needs to do. She's probably got some baddie friends that are single that need what serenading. What are you and boss lady getting for dinner, Steve? Because I am starving. I had what I had? I had 210 calorie little Chex Mix pack for a snack at 11:30, and I haven't eaten since yesterday at like 8 o'clock. So I am famished.
All right, everyone in the chat, you guys are hilarious. Love it. This community is amazing.
It's awesome.
Hysterical.
So what are you getting? Chinese?
Dude, I have no idea. It's already 8 o'clock.
I thought I ordered the steak. The steak wouldn't go through, so I gotta either order steak from somebody somewhere else or go get Chinese or something.
I have no idea what I'm gonna do.
It was the perfect thing too. Like I just got kind of frustrated because I wanted my steak.
Yeah, I'm really not sure.
Well, Steve, I worry about you. Are you writing an article tonight?
No, I'm too freaking tired.
Steve.
I didn't sleep well last night. I'm freaking exhausted. Slacking.
I'm proud of you. I think you and the boss lady need to, you need to stretch your toes out on the couch, the new couch.
Steak and eggs sounds nice.
Steak and eggs does sound absolutely.
Sounds so nice.
You need to stretch your toes out. Get the fireplace going. And I don't know, have some popcorn. I feel like you and the boss lady need to get some TV on the telly. Stretch your toes out on the couch. Put the feet up.
So, question for you.
Yeah.
What time you want to stream tomorrow?
I don't know. Is Amit doing the market close again? I don't know if I can do the market close 3 days in a row.
So let's do this.
I might get fired.
Why we do like 7?
Yeah.
7 or 8?
And based off of the conversation with Chris, I don't think we're doing Cash Flow Chronicles tonight. I was hoping we would.
So 7 your time, 8 my time?
Yeah. I should. It's Wednesday, right? Yeah, I'm available.
Yeah. All right, everyone. So I think we're going to call it. Tomorrow we'll be back at 8 o'clock Eastern.
7 Central.
We'll go from there. Thank you everybody for joining us.
Awesome stream, man. Thanks for having me.
What do you mean? Thanks for having you. It was our stream.
I know, but thank you for setting it up. You set it up. Everybody, I'm putting Hot Steve's YouTube link in the chat. Make sure you follow.
And I am going to make everybody a promise. I am going to look into freaking Zeta again. Even though I don't understand their marketing platform, I will look into it again.
Smart man.
So can you look into Zeta for like 10 minutes tonight also, or maybe tomorrow?
Who, me? Yeah, I can do it.
Yeah. No, the one-armed man. You said who, me?
Oh yes, there's a one-armed man behind me.
Well, I'm just
Steve, do
saying.
you like my little electron rocket back there? You see it?
No, you changed the view.
So-
I guess because I have that still up. What
see
rocket?
it? There's a little rocket on the top of the fridge.
Oh yeah, that is a rocket.
Yeah,
Interesting. Good role model.
trying to be like you, Steve.
I'm trying to be like you.
All right, you and Boss Lady go have a good night.
I still need to know what you're having for dinner though before I go.
Oh, should I just get Chinese, Steve?
I mean,
I really
Yeah.
wanted that steak, but everywhere else is too expensive. Jay Alexander.
I mean, look, in a pinch, I don't hate that.
Hey, what, Chinese?
Yeah.
Little Chinese. And I can drive to that too. I think that's what I'm going. We get some chicken and broccoli, maybe.
I don't hate that. All right. I like it. I'll take it
Get 'em
into
in.
consideration.
You should.
Take it into consideration. All right, everybody.
All right, the chat is just gone
much.
complete degenerate at this point.
Wow. Craziness.
You guys rock. All right, Steve.
All right,
have a
so
good
Zeta,
one.
we got to do research on Zeta. We'll come back to everybody tomorrow with something on Zeta and some other stuff.
Yeah, you guys rock.
Later, everyone. Have a great
Good
night.
night, Steve.